All right, guys. So today we got the Fed meeting. We got NFP prelim data. A lot of stuff dropping this morning. Put up some charts. Stocks are down a little bit in anticipation of this. Tesla down a little bit today too. Q down 420s. Tesla down. You can see Nvidia here. Down to 840s. All right, so today the FOMC meeting happens at 2 p.m. We have prelim non-farm data at 8:15. This on the bottom, put that up a little bit. (8:15 a.m. Eastern Standard Time). There we go. We'll put all that up so you guys can see it. What's up, Pawn, Shub, Tank, Say, Fan, Vanessa, Alyssa, Blaze, Zombie. What's up, team? Yeah, Bitcoin all the way down to 55s, 57s. Let me do a poll here. 55s, 57s. Today's FOMC meeting in non-farm data calls bullish or bearish market action. Vote on that poll. No, I got the trash, bro. I took the trash out. Sorry, again, I just woke up. I gotta drink some coffee here. Ooh. All right, we're up, man. Non-farm employment change numbers expected at 183,000. We also have ISM manufacturing numbers, Jolts, the FOMC rate decision. Today's the busiest day of the week, man. It's expected at 183K. $183,000. Yeah, 183,000. Last time it was 184,000. So they're not really expecting the prelim data to bump up that much. Again, we also have ISM manufacturing data expected at 49.9%. It drops at 10 a.m. And then we got the Jolts report at 10 a.m. We got the Fed meeting at 2 p.m. All right, so Amazon earnings here. So we do have Amazon earnings. What are all the big tech stocks? I know the big seven: Amazon, Apple, Tesla, Nvidia, Meta, Google. I'm missing one. Amazon, Apple, Tesla, Nvidia, Meta, Google. Which tech stock am I missing? Amazon, Apple, Tesla, Nvidia, Meta, Google. I know I'm missing one somewhere, dude. Let me look at my own. Netflix is what it is. That's the one I'm missing. Oh, Microsoft. Yeah. Yeah, so it is May. Yeah, thank you, chat. It's Microsoft. So it's non-farm employment day. So again, I'm going to put a timer up. We don't really have that long. Non-farm employment data drops at 8:15. So it is 6:30. We got an hour and 42. We got an hour and 10 minutes, or an hour and 30 minutes. All right. We got an hour and 40 minutes, actually. I'm sorry. Yeah. Here's the timer. So we got an hour and 40 minutes, roughly. Most people are bearish today on the voting poll here. Sean Deep said, I got a pretty bad video from a player down here about the Legend Poker Room in Houston. There seems to be a few mechanics. If you don't know what a mechanic is, it's somebody that can control what cards come out in a very sneaky way while dealing. Honestly, I went to a charity poker tournament one time, man, and I just got a really strange run of cards, dude. I'm not, maybe, like, it's possible that there was a mechanic dealer there, but I got a very strange run of cards, dude. Like, I got kings beat by aces, like, which is not crazy, but the person that beat me was like consistently getting like great cards. I don't know. Maybe I'm just mad still. This was like 10 years ago. I wanted to win that barbecue pit, you know? No, I'm just joking. Yeah, I'm pretty pumped about my day yesterday. Again, we're going to try to trade the same idea, the same strategy of chop. You know, we're going to try to trade the same strategy of choppiness that we do. Wait, what happened? I thought Okay. I thought I had multiple PA accounts. What happened? What happened? Did they take away my PA account? Wait, what? It's alright, I guess. Well, we did make $1,100 in our other one, so we're building towards this one on Trade of 8. I should have this other one. Thought I had more payment methods here. Whatever. I'm gonna add to some blue chip stocks too today. I think AMD is one of them. I'm gonna add to almost certainly. You know. I mean, I'm still there with my PA account. I still made 1100. Like, look, so it's still here. Like, here's the graph. Let me show you. Or here, yeah. I'm in the process. I never activated the $50,000 challenge that I got funded in the day before. Starbucks all week. I don't know, man. It depends on what the PE ratio is for Starbucks. Like, they're down because they had lower sales and lower guidance, you know. So I think I don't know. I'll probably start buying some blue chips, though. Most likely is the move for me today, at least. Another bank was seized. Really? All right, chat. We have some earnings today, did we? Let me see. Pfizer earnings this morning. MasterCard, CVS, Wingstop, Barrick Gold, Kraft Heinz, Norwegian Cruise, New York Community Bank, Estee Lauder, Marriott, Generac, a bunch of other companies. Yeah, I don't know whether Powell's going to be hawkish or dovish. So Ruggedy, so whoever you're talking to, Star. The meeting is going to be today at 2 p.m. The press conference is at 2:30 Eastern time. yeah, I don't know what kind of tone he's gonna have. Hopefully he's bullish and dovish. I mean, dovish equals bullish in my opinion right now. So I think I think he's gonna be dovish probably, but who knows, man? Anything could happen, really. Yeah, we're going to pause interest rates. We're almost certainly not going to raise or lower or anything like that. We're almost certainly going to continue to pause rates, and that's probably the better move. I don't think raising rates is a good thing. I think it's too aggressive. I think cutting rates is too aggressive. It's too aggressively dovish as well. So, like, yeah, I just don't think it's a good thing. CVS did release their numbers here. Here's CVS. CVS is down pretty big, down very big. For CVS here, they just released. We also have MasterCard, again, PFE, Gold, Wingstop, Norwegian Cruise. All right, chat. Again, AMD at 150s here. So AMD bouncing a little bit, but still down. I'm basically flat in AMD. Looking forward to code. Yeah, we're gonna stream the 2 p.m. meeting. Yeah, we always do. And a lot of protests going on at Columbia University. Yeah, everything's so political nowadays. We also have manufacturing PMI as well today, chat. Yeah, no worries. Yeah, so we're going to put some of these earnings up in chat. Pfizer did better than expected EPS, better than expected revenue, fiscal year EPS view of 235. They expected 230 or 221. So much better than expected guidance, revenue, EPS, fiscal year revenue view reaffirmed. at 61.5 billion. They expected 60 billion. So Pfizer did really well for their earnings, really, really well. Look at their numbers here for Pfizer. And I am in Pfizer right now, so this is good for me, to be honest. I'll take it, you know. Still down, but good. Green is good. I'll take it. Snapchat's been running up. I've been in Snapchat. It's quietly been running up to $15 a share. My average price is 10. I'm up 50%. Yeah, look at CVS dump. Here's PFE. Contracting a little bit, but already out with numbers. Good numbers here for PFE. Like pretty solid numbers. I don't know, man. People, like, for whatever reason, you know, and again, I never understood people like this, right? Like, people get so, like, it's fine to not like a stock, but some people seem like they just hate these companies. Like, when I bought Snap, I had so much hate and nonsense. Like, so many people made fun of me for buying it, you know, and I've done it over and over again, like, pretty regularly. And I always give people the same argument. Snapchat is, at the time, was a $10 stock that had hundreds of millions of daily active users. Hundreds of millions of daily active users. I can see the sentiment for Snapchat change and increase with, like, my daughter and their friends, right? Like, my daughter's a teenager in high school. I can see what she can't, number one, she can't use any social media. So I don't let her use anything, including Snap, right? Not yet. Not until she's like 17, you know. Will she be able to use anything? Like, we're, you know, I'm a big believer in making them wait. Anyways, back to the point. I can see what she's asking me to use, right? Like, she says she wants to be able to use Snapchat. She said all her friends are using Snapchat. And so if young people are using Snapchat, then it's got to have some validity in the stock market, right? Like, it's got to have some use. If it has if Snapchat has hundreds of millions of daily active users, and specifically young people are adopting it again, good sign for it. And so, yeah, if it's down at $8, $9, $10 a share, I'm gonna buy the dip, and that has treated me very, very well over the last few years in Snapchat. Yeah, I mean, she's 14, Sam. So. Right, like, it's crazy how many people hate companies and like, they just get so biased, man. Like, people are so biased. Again, trading is one of those games in which people rush to sound like experts. They rush to sound like experts, where I think you're going to have a much better time just admitting you don't know things, admitting you might be wrong about things, and stop putting so much pressure on yourself to be right or wrong, and just admit you don't know things and just speculate, right? Like, that's what trading is speculation. I think if you could just be smart and just take calculated judgments on different things, using your own life as a guide, right? Like, that's what I do. I use my own life as a guide. My daughter and her friends want to use Snapchat and still use Snapchat. Snapchat has hundreds of millions of daily active users. I'm going to buy Snapchat, and I'm up 50% now in Snap. I'm not quite 50%. I'm up whatever. My average price is $10.90. It's at 15 right now. So whatever percentage that is. But still, I mean, the point remains, you can use your, like, I only buy companies that I know. And I think this is a really good guide on how to buy companies. Buy companies you know. If they're really, really weak and you know them and they're successful, you know, I'm not telling you to buy anything blindly, because it's super, it's much more nuanced than that. It's much more complex than that. But, yeah, just make calculated judgments based off of things you know. I think that's the smartest way to invest. I think Warren Buffett said, trade what you know or invest in what you know, you know. You see Warren Buffett go out there buying McDonald's every day. And honestly, I truly believe he does not eat McDonald's every day. I think he's just pumping up the stocks he's holding because he's freaking Warren Buffett, which is all right. But, yeah. Right, Robert. I mean, that's the goal, bro. it's hard. People try to pull traders in all these different directions, you know. I see it a lot with my YouTube channel. Like, I just try to be honest with people about what I'm doing, and I could be wrong. There's a freedom in that, I think, especially on YouTube, where everybody else is trying to be a market guru expert who's never wrong and is super, you know, super smart and calculated and all this different stuff. I would rather just tell people, like, I have no idea what's going to happen. And, you know, again, I'm green on the year. I'm green on my current portfolio. I'm just going to hope to continue to be green. And, you know, last year when last year ended, I was green in unrealized gains. I don't know if I was green in realized gains. I think I might have been, but I was certainly green in unrealized gains last year when the market ended. All right, chat. The $1.3 billion Powerball winner from Portland decides to take the lump sum of $422 million, bro. That's how you do it, bro. Take the freaking lump sum. They're going to try to throw a crazy big number. Well, hey, if you don't take the lump sum and you take the monthly payments, you'll make $1.3 billion. No, you won't. You won't make a quarter of that. You're not going to live long enough to. Take the lump sum, throw it into bonds, throw it into the S&P, throw it into real estate, throw it into gold, and then just sit on that, and you'll make so much money from interest and compounding that it's not going to matter. All right, so here, we're going to go back to this song in a second. I got to mute this. All right, guys. So it's about to be 7 o'clock. Thoughts on Rivian? Yeah, I ended up cutting a lot of my SoFi trade, to be honest, a couple days ago. I'm holding it still, but I'm not going to sit in and overextend myself. It looks like it was the right move, too. It's ended up dipping a good bit now, so, you know. I hear the winner. Yeah, I do see that. And that's good for him, man. Hopefully he can enjoy it and he can just split it with everybody. Like, I feel for him, man. It's a tough prospect. Like, money isn't everything. One of the most craziest quotes is from Steve Jobs on his deathbed, man. That's a quote that'll hit you, you know, right here, right in the feels, man. It'll mess with you if you listen to it. Yeah, so Steve Jobs' last quote is this, right? Like, listen, if you never heard this quote, um, You know, so this is Steve Jobs' deathbed quote. This is Steve Jobs' deathbed quote. Honestly, it's one of the most like it'll mess with you, right? So I'm gonna read this quote. It's Steve Jobs on his deathbed. All right, one of the richest men in the world, of course, like founder of Apple. He said, "Quote." He said, "I reached the pinnacle of success in the business world. In others' eyes, my life is an epitome of success. However, aside from work, I have little joy. In the end, wealth is only a fact of life that I am accustomed to. At this moment, lying on the sick bed and recalling my whole life, I realize that all the recognition and wealth that I took so much pride in have paled and become meaningless in the face of impending death. You can employ someone to drive the car for you, make money for you, but you cannot have someone to bear the sickness for you. Material things lost can be found, but there is one thing that can never be found when it is lost: life. When a person goes into an operating room, he will realize that there is one book that he has yet to finish reading, book of healthy life. Whichever stage in life we are at right now, with time, we will face the day when the curtain comes down. Treasure love for your family, love for your spouse, love for your friends. Treat yourself well, cherish others. As we grow older and hence wiser, we slowly realize that wearing a $300 or a $30 watch, they both tell the same time. Whether we carry a $300 or $30 wallet or handbag, the amount of money inside is the same. Whether we drive a $150,000 car or a $30,000 car, the road and distance is the same. We get to the same destination. Whether we drink a $300 or $10 wine, the hangover is the same. Whether the house we live in is 300 or 3,000 square feet, loneliness is the same. You'll realize your true inner happiness does not come from the material things of this world. Whether you fly first or economy class, if the plane goes down, you go down with it. Therefore, I hope you realize when you have mates, buddies, and old friends, brothers and sisters who you chat with, laugh with, talk with, sing songs with, talk about north, south, east, west, or heaven and earth, that is true happiness. I'm pretty sure that was Steve Jobs. Let me see if there's I thought that was it. Hold on, let me see. There might be a different one. Okay, yeah, it goes. That is true happiness. Don't educate your children to be rich. Educate them to be happy, so when they grow up, they will know the value of things and not the price. Eat your food as your medicine. Otherwise, you will have to eat medicine as your food. The ones who love you will never leave you for another, because if there are 100 reasons to give up, he or she will find a reason to hold on. There's a big difference between a human being and being human. Only a few understand it. You are loved when you are born. You will be loved when you die. In between, you have to manage. The 6 best doctors in the world are sunlight, rest, exercise, diet, self-confidence, and friends. Maintain them in all stages and enjoy a healthy life. Steve Jobs, you know. Honestly, you got to think about that. That's a scary quote, man. That's a scary quote. I try not to put too much of my work involved with it, but, man. Any trading in the cannabis sector? Yeah, so the cannabis descheduling or reclassification of cannabis has caused cannabis stocks to go crazy. Up to over $15 for CGC, which is probably one of the biggest ones. Tilray up to 240s, spiking up from like 140s, 150s. All right, so let me put the music back on. All right, chat. We got almost 300 people here. And, yeah. We're going to get some music playing here. All right, look, Pfizer dipping down though. I'm in Pfizer. I'm green on the day, but it's still got a long way to go. Nvidia at 850s right now. Nvidia all the way down. I wonder if Nvidia can move back up. It's pretty flat. The Fed meeting might impact all of this stuff though. Amazon at 178. All right. AMD at 148, so I might add a little bit to this too. I think I'm going to. We just added a little bit. more to AMD. We added a little bit more here to AMD. All right, so let me get some music playing back. Yeah, I mean, I think those things on like communism, right? Like communes work on small scales. The problem is when you extrapolate that to a much larger scale over time, people feel less part of something, right? Like I'm not trying to be super political. I just think it's interesting, like the structures that people push for, where there's never been a successful instance of it in history, right? Like there just hasn't been. Like, yes, you have some socialist aspects of our economy and structure, right? Like that's without question. And I'm not necessarily against it. Like I'm for free college. I think college should be free. I think big education has gotten behind it, and now they're charging so much freaking money, and they've changed the standard to where everybody should go, and it's just ridiculous. I think it should be free just like the rest of the world, right? I think that's a standard in the rest of the world that I agree with. And I think if my tax dollars are going to something, I'm okay with them going to that and letting people, not only that, but also like welding and trade schools. Like I think all of that should be free. And I think if our tax dollars are going to be spent on anything, building people up to where they can earn more money is something that is justifiable in terms of spending, right? But again, the problem with most of those structures is when they get, with capitalism, whoever gets the power generally at least has to work for it. Not always, but generally, whoever gets power in capitalism usually has to earn it. They might abuse it once they have it. There might be corruption, which is an inevitable thing. Like, we're gonna have corruption. It's just human nature, right? Despite what kind of structure we have, we're gonna have corruption. At least in capitalism, the people have to earn it. And in the other forms, they're just kind of blindly giving it most of the time, and that calls them to respect it even less. And corruption gets rampant and worse. And so I at least have to, I don't know. There's a lot of arguments for it. I'm certainly a capitalist, and I think if you trade stocks and you claim not to be a capitalist, you're silly. You're literally investing in public companies. But hey, regardless of what you believe or agree with, it's all love here. Yeah, again, I think what you got to understand about these cannabis plays is that the classification changing for cannabis to schedule, what did it get changed to? So yeah, they're gonna move. They're gonna reclassify cannabis to, Schedule 3, which basically the difference is like the previous one said there was no accepted medical use. Changing it to Schedule 3 changes it to where now it does have an accepted medical use. The biggest change that this is going to do to the industry as a whole is that this is going to allow lending to be done. This is going to allow lending to be done on cannabis products, and that is going to grow the sector. That's why you see Tilray gapping up, CGC gapping up, ACB gapping up. It doesn't, outside of that, legalization wise, it's not really going to make any big changes or movements or anything like that. Yeah, for sure, Carmen, 100%. In small groups, it works. Like communes work when they're small, when they get really, really big, like the United States, it's never gonna work here. Of course, it's never gonna work. It's gonna be, again, a lot of people don't understand history. I'm not saying that's anybody here, but like a lot of people don't understand history, and they argue for things that are silly. I think sometimes, I think it's a nice thought to think that we can all get along and do that, but you got to question how feasible it really is. Hey, thanks, Sam. I hope people can see I'm very middle ground in a lot of ways, right? Like, I think some people are so wrapped up in rooting for their side that they just kind of act like they agree 100% with that side, whomever it is, right? And I think that's a silly thing. I think most reasonable people are somewhere in the middle, And like, people got to stop looking at it so, for lack of a better word, tribalistic, and instead just try to be objective. I go by policies. You know. Coffee tastes good. Oh, dude, I was drinking some bad coffee not too long ago, and it was not good. All right, chat. Again, non-farm employment data comes out in an hour, in 1 hour. Chat, 1 hour for non-farm employment data. We got the Fed meeting. We got the Jolts report today. Just so much stuff dropping today, to be honest. The Jolts report, non-farm employment change, the Fed meeting, manufacturing PMI data. A lot of stuff going on right now. It might be a sideways day too. We're gonna attack choppiness, but we do have so much stuff dropping this morning, to be honest, chat. A lot of stuff, in all honesty. A bunch of different things. All right, chat. Is it time to buy anything right now? Again, I added a little bit more to my AMD trade just because I'm willing to hold this, I think. Cannabis stocks are up big. We got Amazon pretty much flat, straight flat from their earnings. Meta, another one that's down pretty significantly here. We're still pretty green on it. I'm probably just going to hold it. I mean, Meta's still got a pretty good PE ratio. It's down a lot from 500s, which I guess was probably arguably necessary. It was at 530s prior to all that stuff. So I think it's understandable. Yeah, it's going to be it's every day this week is busy. Every freaking day this week is incredibly busy, right? So today, again, let me just break down today alone, just today, right? So today we got non-farm employment data, prelim non-farm payroll data, prelim NFP data at 8:15 market time in an hour. Okay, so that's the first report today. Following that, all right, so following that, we have ISM manufacturing data, PMI data at 10 a.m. We've got the Jolts job report at 10 a.m., which is a big report. The Jolts report comes out. Expectations are for 8.7 million. 8.7 million for the Jolts job report. Again, big report. We'll have over 1,000 people here probably at 10 a.m. watching it. FOMC meeting at 2 p.m. today, where we almost certainly going to announce a pause. I don't think we're going to raise rates. I don't think we're going to cut rates. We're almost certainly going to pause rates today, like what's widely expected. But again, the FOMC meeting today at 2 p.m. Jerome Powell is going to do the accompanying press conference at 2:30 today. And then later on this evening, we've got QCOM earnings and a bunch of other ones. QCOM's not a big enough company to cover really in that regard, like earnings wise, just not big enough. But we do have QCOM, Carvana, Etsy, Paycom, Fastly, DoorDash, MGM, First Solar, and a bunch, Marathon Oil, a bunch of other companies dropping earnings this evening. I'm not going to stream. These aren't big enough. QCOM's just not big enough as a company to really worry about covering. And then tomorrow, and that's just today, right? Tomorrow, we've got more data coming out. So again, tomorrow we have jobless claims, non-farm productivity, and factory orders coming out. Again, jobless claims, non-farm productivity, and factory orders. And then tomorrow evening, we got Apple earnings. All right, so more stuff tomorrow. Apple earnings, jobless claims, and more. Okay, and then Friday, we've got non-farm employment numbers, or we got non-farm payrolls. We got payroll numbers Friday. Unemployment report comes out Friday as well. Expectation is 3.8% for unemployment. Payrolls expected at 240,000. And then we also have ISM Services PMI tomorrow. And then we also have Fed speeches tomorrow evening. I'm not going to cover that. It's not Powell or anybody like that. But yeah, it's a really, really, really busy week this week, chat. Really, really, really busy. I don't think we have... I know like next week it's kind of slow in terms of economic reports. But we do have like Berkshire Hathaway earnings in the morning on Monday. Palantir earnings also coming out Monday evening. Tuesday morning, we got Disney earnings in the morning, which they're doing it in the morning. I'm okay with it. I don't really cover it in the evening. But yeah, Disney earnings in the morning on Tuesday. NKLA numbers, Ferrari numbers, Crocs. Tuesday evening, we got Rivian, Upstart, Wynn, Lyft, Twilio. Wednesday morning, we got Uber, Shopify, Affirm, Toyota, Emerson. Wednesday afternoon, we got ARM, Airbnb, Robinhood, AMC earnings. All right, yeah. So next week's gonna be busy too. Thursday, we got Roblox, Warner Bros, Sundial, Marathon Oil, or Marathon Digital, SoundHound earnings are gonna be Thursday evening. So yeah, it's just the next few weeks here. The craziest day, though, coming soon is going to be on May 22nd, Nvidia earnings. Nvidia earnings are still single-handedly our largest ever stream. Our largest stream we've ever done is Nvidia earnings, where we had almost 14,000 concurrent viewers. 14,000 simultaneous viewers is what that means. We had 13,000 people live. We got like 100,000 views total for Nvidia earnings. So it's going to be chaotic. One of the biggest moves of the market is going to be on May 22nd. So just be ready. What's up, Beach Bum? Yeah, good luck, G. All right, chat. Nvidia back up to 850s here, starting to rebound up a little bit. Let's see if it holds. All right, chat. Look at Nvidia pop. I'm trying to see if there's any more news. I'm looking at the other earnings that dropped today. BYD came out with some numbers. New York Community Bank also dropped as well. Marriott dropped 213 versus 217, revenue of 5.98. Raised fiscal year guidance. So Marriott raised guidance. MAR. All right, so again, let's see if we hold here for Pfizer. I'm going to put up the SPY. So Pfizer did have good numbers. They gapped up. SPY all the way down at $500 again here ahead of the FOMC meeting. Is it time to buy the dip? What do you guys think? Again, let's look at the poll here. Are you bullish or bearish today, chat? We still got 50 minutes plus. Yeah, CVS had numbers come out. All right, chat, we're at 851.50s on Nvidia, 851.50s. Yeah, so we did have New York Garmin. I didn't even know Garmin was still around. We do have Kraft Heinz posting 69-cent EPS expected. So that's neutral. That's what they expected. Revenue of $6 billion. They expected 6.43 or 6.4 billion. They expected 6.43. So a little bit under expected revenue numbers. They reaffirmed fiscal year guidance. Marriott again did come in pretty positive. Mortgage rates showed up today at 7.29%. 30-year mortgages went up month to month or week to week again here, chat. So mortgage rates, again, interesting look at like short-term rates or longer-term rates. 30-year mortgage rates up to 7.29%. Last time they came in at 7.24%, chat. So what do you guys think about this? We'll put this up in the chat. Yeah, interest rate announcement at 2 p.m. What do y'all think of the music today? Again, the SPY right around $500. I think it's a big milestone spot. All right, chat. Sorry, I'm rocking out to this music. Hey, John, can you talk about Jay Powell decision on rates going to be, what higher interest rates means to the economy and lower interest rates, please and thank you. Yeah, I got you, bro. Okay, so, all right. Now, okay. I'm trying to think of the easiest way to delve into this. So, interest rates are controlled by the Federal Reserve. In a couple different ways. It's controlling interest rates. The easiest way to understand economics is to understand that controlling interest rates, and this is in any country, is the way the central bank controls the economy, and it's the tools they have to help fight, prop up, so forth and so on the economy, right? It's by controlling specifically short-term interest rates. By controlling short-term interest rates, eventually there's a lag to it. Eventually it'll trickle into long-term rates, and that influences the economy. In what way, you might ask? Okay, so the Federal Reserve, right, our central bank, their job is to help save the economy. If the economy's at risk, the Federal Reserve their job is to help save it. The Federal Reserve is basically like a bank that creates policies and helps other banks, like a supporting bank to the other regional banks. So you have that's why you'll hear like the Atlanta Fed president is one of the regional, Fed banks. You'll hear like New York Fed president, like all this different stuff. Again, these are the heads of the regional banks. They're still Fed members. They all make up the FOMC, the Federal Open Market Committee, right? And then the big bank that kind of, influences them and creates policies for them and all that stuff is the Federal Reserve. The Fed, is what we call it. Now, the chairman of the Fed is Jerome Powell, right? He speaks today. Anyways, so if the economy is at risk, the Fed will step in and they will try to help save the economy. How does the Fed help save a struggling economy? If the economy is at risk, essentially too little people are working. Like if not enough people are working, right? We're at risk for a recession or depression or whatever it is, right? If we're in that situation, what does the Fed do? The Fed steps in and they try to bring interest rates down. Why do they want to bring interest rates down? Because when you bring interest rates down, people spend more money on other stuff. If you're spending, so an example is like right now, the Fed's the opposite. The Fed's worried about inflation, so they're trying to keep interest rates high. So if you look at mortgage rates as an example, mortgage rates they just came out this morning. They're 8% right now. And so, but if they were lower, right? If mortgage rates were instead 2% or whatever, people are going to have a lot more money to spend on other things, right? Businesses are going to have a lot more money. People are going to have a lot more money to spend on other things. And in return, that stimulates spending in a positive and optimistic way. And so if the Fed's worried about recessions and depressions, and essentially what that means is too little spending, spending's too low, GDP's too low, spending's too low, unemployment's too high, whatever it is, the Fed's going to step in and they're going to try to bring interest rates down. Why do they want to bring interest rates down? Because again, that will stimulate more spending. If you're paying less money in auto loans or in mortgage rates or whatever, you're going to have more money to spend on other things. And so 2020 is a good example. This happened in 2008. The Fed can bring interest rates down by directly cutting rates, i.e. a rate cut, which is what some people are pushing for. I'm not pushing for a rate cut right now. So they could directly lower what's called the federal funds rate, which is short-term interest rates, and eventually that will trickle into long-term rates, but again, there is a lag. Or they can do something that's a pretty recent thing. It's a pretty new thing. It's only started over the last, 30 years or so. It's called quantitative easing and quantitative tightening. These are other more indirect ways, more desperate ways, I guess is a better way to put it, of controlling interest rates, right? So what quantitative easing is, so an example, I'll use 2020. In 2020, pandemic happened, people weren't working, the economy was at risk for depression, right? Recession, whatever. So the Fed stepped in and they did QE, which is quantitative easing. Now, you're going to hear some people just say this is pure money printing. And in a way it is. It's not pure money printing. Like, a lot of people don't really understand economics in this way. And so they think that any government spending is QE, right? That's not true at all. Like, QE is a very specific thing. It specifically means that the Fed expands their balance sheet by buying up bonds mostly. By buying up bonds and expanding the Fed's balance sheet, this allows banks to lower interest rates to consumers, right? So what happens is that the Fed steps in, they buy a bunch of bonds, they expand their balance sheet, and this allows banks to lower interest rates. Okay, so that's called QE. That's what they did in 2020. The economy was at risk. They stepped in, they did QE. They cut the federal funds rate. They brought interest rates down to almost zero. And what was the consequence of them doing this? Number one, the economy rebounded. People started spending more, in this period of time. Inflation spiked because of it, though. So, like, if you look at the Fed funds graph, right, here's over the last 5 years. Here's 2020. Chat, here's 2020. Right here. So here's 2020 right here. And again, what happened? The Fed stepped in. They brought interest rates down to almost freaking zero. Again, stimulated spending, and they kept them down for a significant amount of time until about January of 2022. But what happened here is that inflation spiked. Prices spiked, inflation eventually spiked and got really, really high, up to almost 9%, which is the natural consequence of bringing interest rates down. The flaw of bringing interest rates down that much is that prices spike, because if people are buying up so much, businesses are going to raise prices, right? Rolex prices spiked. Bernard Arnault became one of the richest men in the world. Louis Vuitton prices went up. Like, prices went up universally. They also sent out the Fed also, or the government also sent out stimulus checks, which obviously exacerbated the spending problem and made spending worse and caused inflation to spike. And so once inflation spikes, the Fed has to take the opposite stance, where, when the economy's at risk, they want to bring interest rates down. But when inflation is a risk, kind of like we're in right now, what is the Fed going to do? They're going to bring interest rates up. And so again, you can kind of see once inflation started to spike, they started raising the federal funds rate through rate hikes is what they did, right? If you look back over the last few years, the Fed raised rates. They did a bunch of rate hikes, raising the federal funds rate, which is short-term interest rates, and bringing interest rates up. Now mortgages are 8%. Like I said, they're really, really high. Yeah, they were pretty low before 2020, but they lowered short-term interest rates during that period of time, and they brought interest rates down a lot anyway. But so anyways, once inflation started to spike, they started raising the federal funds rate. Why? Because when interest rates are high and people are spending more money on interest rates, they have less money to spend on other stuff. And so if you want inflation to go down, what do you need? You need the public to stop spending as much. And so one of the ways the Federal Reserve will push the economy down is by bringing interest rates up, raising the federal funds rate. Again, right now we're also in a period of the opposite of QE, which is called quantitative tightening. It's the opposite of QE. It's not directly selling bonds, which, QE is buying bonds, expanding balance sheet. QT, unless it's direct QT, which is selling bonds, but this is not what we're doing right now. We're in a period of what's called passive QT. And so what that means is that the Fed is not buying up bonds. They're not expanding their balance sheet. They're not injecting liquidity into markets. And then instead, they're letting their current holdings mature and run off their balance sheet, reducing it and taking liquidity away from markets, which causes banks to keep interest rates high. And so again, now interest rates are high, and the Fed has been keeping interest rates high to combat inflation. The problem is that real estate professionals are struggling. Mortgage professionals are struggling because, again, it's really hard to sell homes if interest rates are freaking 8%. And so right now we're in a period of QT. We're in a period of what's called a hawkish Fed. A hawkish Fed is when they want to keep interest rates high to discourage spending and keep inflation down. A dovish Fed is when they want to keep interest rates low to contribute to spending and help the economy. And so, again, right now we're in a period of a hawkish Fed with QT and high interest rates. And the question is, when are we going to cut rates? When is the Fed going to pivot from a pause? We've been pausing interest rates for the last little bit. You can kind of see this line even out here because of pauses, right? Which means that they're not raising the federal funds rate. They're not raising short-term interest rates. They're not lowering short-term interest rates. Instead, they're keeping them flat. And that's what we've been in now. And that's most likely what we're going to announce today is a flat interest rate curve. We're not going to really raise rates. We're not going to lower rates. We're probably going to keep it flat. And if you look at these percentages here, But again, I hope that makes sense. That's the economy in a nutshell, right? Like that's what we're in right now. Again, it's one of the reasons I'm so critical on people who tell me we're in a recession right now, right? Like you get some people that are just kind of mostly wrapped up in politics that are watching the news, and the news is like, oh, economy bad. And so they say economy bad, recession, right? We're not in a recession. In fact, the problem right now is too much spending, too strong of jobs, and that causes too much spending and inflation to spike. The problem with cutting rates early is that when you start to cut rates, inflation is sticky, right? Inflation can get really difficult. When we look at PCE from last week, once inflation starts to spiral out of control, it can get really, really bad, really, really high, really, really fast. And so if we cut rates too early, just because we're getting pressure from people, then in the end, it's going to cause problems in markets. It's going to cause problems. And so you just got to be smart with this. And again, I personally am under the stance of let's keep interest rates high. Let's discourage spending. Let's make sure inflation really gets under control before we start cutting rates and trying to bring them back down. I don't care how high interest rates are. I want inflation to get under control first, because one of the consequences of 2020 and all that stuff was that prices spiked. And very rarely does inflation literally go down. It just slows down generally. If we can slow it down, like the Fed's target is 2%, which means that they hope to slow the rate of price increases down to 2% year on the year, right? And so very rarely will prices actually go back down, and they've actually gone up a lot. And I would like for them to at least stabilize before we start cutting rates and bringing interest rates down and potentially making inflation worse. No script. I'm just kind of telling people, you know, I'm just kind of telling people the economy. Like, again, I try to say this multiple times a day, multiple times a week, because it's an important thing. Like, once people start to understand the economy, I get less people telling me we're in a recession. I get less people telling me we're in a depression. I get less people arguing about things they don't really understand. And it's more helpful for the channel overall for people to understand economics in that way. I think once you start to understand economics in this way, you start to realize like what we're in. You start to be able to watch it more accurately and understand what's going on. And I think that's an important thing for the public to know. Yeah, I mean, they were low in 2019 though. Like, here's a graph of mortgage rates, right? So like I hear somebody say they were pretty low prior to 2020, and that's true. But again, like this is what you got to really look at. Okay, so here's 2019. Or here, let me show you guys this. So here's 2019, right? They were at about 4.5% in 2019, right? 2020 happened, and you could kind of see interest rates drop really, really low. 2021, they were at under 3%. This is 30-year MBA mortgage rates. Right, so again, 2020 happened. Prior to that, again, they were at like 4.4%. And May 10th, they were at 4.4%. If we drop down, and by December 25th of 2020, they were at 2.9%. Right, and again, you can kind of see the Fed started doing. If you look at the federal funds graph, right. Yeah, if you look at the federal funds graph, the Fed started raising in December of 2021. So the Fed started raising rates here. And you can kind of see after the Fed started raising rates in 2021. Let me get this out the way real quick. You can kind of see after the Fed started raising rates here. You can see mortgage rates spike. There's a lag to it, but yeah, and you can see now we're at the 7% that we're at now or whatever. So Yeah, I mean, that's the graph of mortgages, and you can kind of see how that is influenced by the Fed's rate decisions and all that stuff. So I hope it makes sense. Non-farm employment change last month was, I believe, 184,000. It's expected today at 183. Yeah, I mean, again, people got to understand, like, you get a lot of pressure for rate cuts by, like, mortgage professionals, real estate professionals, because it's really hard to sell houses right now. Like, you know, again, as a real estate agent myself, and I'm not really marketing myself because I don't really do any home sales. It's mine, Blitz. Well, it depends on which non-farm. There's multiple different non-farms. So there's NFP, non-farm payroll data, but that's not what we're asking. The prelim non-farm employment change data came in at 184 versus today's 183 expectation. So, yeah, that's basically what it is. I'm in Tesla. I hope it goes up. I'm pretty green on the position, though. Our average price is 149s on Tesla. And it's spiking up right now. So Tesla is spiking up here. So we'll put Tesla. Not a huge amount, but did break over the 200 EMA and the VWAP. Yeah, we're going to stream Powell for sure. Yeah, I did hear Kendrick Lamar's diss. I thought it was good. I don't know whose I liked more, Drake's or Kendrick's. I think some of Kendrick's disses were a little bit, I don't know, underwhelming. I thought that Drake's, I thought that, I don't know. I think they're pretty even, in all honesty. I think that Drake's disses were a little bit more calculated, I guess is the point. Excluding the Tupac Snoop one. The first Drake diss was good. I think the follow-up one where they used AI, Tupac, was just, I didn't like that one at all. But I thought Kendrick's Euphoria was good. I liked it. I'm gonna go with purple tie. Powell's been wearing purple ties lately, so I'm gonna go with purple, but who knows? All right, guys, red or green from today? We did a poll here. We still got 680 or 500 votes. 52% are bearish today. 48% are bullish. Are you guys bullish or bearish today, chat? Let me know. We still got 30 minutes until non-farm employment data comes out. 30 minutes, chat. Yeah, the problem with Kendrick is, like, I think, like, him calling Drake a bad dad. Drake seems like an okay dad. It seems like he's taking care of him. And so I think he's using kind of like old stuff to try to hit at Drake. I think that's a little tired, but, you know, maybe I'm biased. I like Kendrick's music a little bit more. And so I wanted to like his more. All right, chat. Tesla broke over the 200 EMA VWAP level, and now it is pulling back some. Drake avoiding his kid for 17 years. No. He's recent. I mean, yeah, his kid is only like 5 or something, you know. And I'm pretty sure, like, I'm pretty sure his baby mother got him, or got pregnant, and then he was skeptical because she was not the most monogamous behaving woman out there, I guess is the easiest way to put it. And so I believe him being skeptical of whether the son was his is understandable. But once it was his, I'm pretty sure he's been there. But I don't freaking know, man. I don't know what they do. I don't know what they're doing over there. Bearish inflation is not going away. Yeah, inflation's the risk right now, I think. But GDP was lower. It's so, hey, we got 30 minutes, chat. 30 minutes between non-farm payroll data. Yeah, she's for the streets. Yeah, basically. Yeah, get Maury out here, bro. All right, guys, so we're looking at some stuff for the day here. Again, the European Central Bank and the Bank of England have been trying to stop the Fed's fight against U.S. inflation from causing currency depreciation. The Bank of Japan also trying to reboot its economy by keeping, interest rates pushed with the yen suffering thus far. Depreciation pressure on these currencies will persist until the U.S. moves back towards the sweet spot. This is Beamish. Beamish saying, quote, depreciation pressure on these currencies will persist until the U.S. moves back towards the sweet spot. Inflation needs to print at 3%, not 4%, but growth needs to stay resilient enough to support the global recovery narrative, end quote. And that's from Beamish. A lot of people are worrying that jobs are going to go down. There's a couple signals that show jobs could be getting worse. Recent data showing sharp deterioration in hiring plans for small companies. And this is from the National Federation of Independent Business. We had some other data releases that showed, quote, 12-month expectations of losing a job shot up in the past few months, while the composite employment index on the PMI dropped sharply last month. Several different sources all saying the same thing. Starts to become a story, end quote. And then again, I think this is Beamish still speaking here. She said, quote, historically have a good record of predicting downturns. Or she said that generated surveys, quote, historically have a good record of predicting a downturn in jobs, end quote. Quoting, again, at this stage, leading indicators suggest a few months of weakness, which could scare markets, but also would lead the Fed to cut, with the economy then recovering rapidly. Asian currencies, however, need U.S. data to come out just right in the next few months, however, to avoid the building pressure on policymakers to go for a step change, end quote. For example, quote, again, we're quoting here from a Market Watch report, but again, quote, the BOJ better hope that we are right about U.S. inflation printing lower and jobs coming in weaker, though not too weak. If they're wrong, Japan policymakers could be moving too slowly on rate hikes. Nobody knows what will happen if you raise interest rates in an economy with debt over 260% of the GDP. So yeah, basically she expects weakness in jobs. And I think we did see lower GDP this last quarter. Although again, this is kind of this is what happens when you keep interest rates high, right? When you're keeping interest rates high, the risk of doing that for too long is recessions, depressions and stuff. But I think that that's kind of what you need to keep inflation down as well. And so, you know, it's a slippery slope, but we will see what happens. We got Powell speaking today. Be ready. Maybe Nvidia earnings will help save the market. I don't know. This guy says, I've been married for 19 years. I've never paid for nails for my wife, never paid for clothes. I've never given her a chunk of money and said, here you go shopping. Never, bro? You've never paid for that stuff for her? I mean, listen, even if, like, look, my wife, like, we share money, right? And we all contribute. But I certainly buy her things like that. Like, you got to, you know, as a spouse, you got to do that. That's like your job. Oh, wait, here. I gotta go. I gotta make sure my wife's getting up. Guys, I'll be right back. I gotta make sure my wife's waking up. My son has a spelling bee today. I'll be right back. All right, we're back. Yeah, my son has a spelling bee today. My son's so smart, man. I'm so proud of him, dude. So every year in my son's school, they test. They do like preliminary testing to see who gets to go to the spelling bee, right? And they only pick the 40 smartest kids or the 40 kids that do the best in the entire elementary school get to compete in the spelling bee. And so the 40 kids out of hundreds and hundreds of kids that do the best on these prelim testing and get to be in the spelling bee. My son has made the spelling bee every year of elementary school. Every year. Like last year, he made 5th out of hundreds of kids in the entire elementary school. I don't know what he's going to do this year. One year, he came in 2nd. You know, he's never won it. But to be fair, he never really studies. We try to get him to study. You know, I was always kind of like a crammer. I never really studied that much. I would always kind of cram at the end. But yeah, hopefully he does well. I'm rooting for him. Top 3 smartest kids in the world right now, for sure. Hey, thanks, guys. Anti-disestablishmentarianism. Speech is at 2 p.m. or 2:30 Eastern Standard Time today. All right, Chad, we got 700 people here. We got 20 minutes left until non-farm employment data. Tesla dipped down to the 200 EMA and it's now bouncing. Yeah. So again, we got 700 people here live, chat. 700. Yeah, I mean, I would never stay up until 2 a.m. I would always, like, what I would always do is I would stay up, right? And I would, or I wouldn't stay up. I would get enough sleep. I would wake up the next day, and I would cram in class, like at school. Like in early morning in school, like when I first got to school, I would just cram all day. I would just look at my notes, cram it, and then it was the most refreshed in my mind too, and I would usually do okay. Like when I took my ACT, right? When I took my ACT, you know, I had a bunch of my friend group taking their ACT at the same time, you know, and again, I was young and dumb and partying a lot and like doing dumb stuff when I was a teenager. You know, I remember the day before my ACT, I stayed up all night doing a bunch of dumb stuff, and didn't get any sleep, right? Didn't go to sleep at all the whole night. Stayed up all night, didn't get any sleep. Partying out with my friends. And I go and I take the ACT, and you know, I remember I had one friend that was like shaming me for it, probably understandably so. She was shaming me for it. She was saying, John, you're going to do bad on your ACT. You should have gotten to sleep, blah, 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 right? And I just kind of ignored it. It went in one ear and out the other. Eventually, I go take the ACT, and my dad was PO'd at me too because I didn't have a math calculator either. I needed a graphing math calculator. I didn't have any calculator at all. And so I go take my ACT, and I get my score back, and I scored like a 22 or a 24 on it, which is above average, right? Like average is 20, you know? And the girl that was like getting on to me, I think she scored like an 18 or something like that. And so she was always kind of big mad for whatever reason about that. I still genuinely wish I went back and I took it, you know, sober-minded with sleep and with energy, with the graphing calculator. I wonder what I would have scored if I would have actually, like, legitimately taken it. But we'll never know. You know, we'll never know. Anyways, Tesla back up to 180.50s. Right now, I'm not really trading. I'm just kind of waiting here. Tesla, rip it up, though. I'm in Tesla right now. It's up to almost 185 or 181s. The real question is, when is Tesla going to break 200? Again, Google back up to 165s, too. Is it time to buy any of these dips in tech? A lot of tech was dipping down. Is it time to buy up any of it? I don't know about that, Hector. I think she was trying to be helpful. You know, she was trying to be helpful. I don't think it was bad-natured. But I think when I scored higher than she did, when, I think she got, I think, yeah. I really do. It's one of the, I should have gone and taken it again. I should have retaken it, to be honest, because I probably, my guess is like if I got a 24 on it, then I think I probably could have gotten like at least like a 28, but who knows, man. Average is like 20 or like 18. Perfect, I believe, is 32. It might be 34. But I do really wish, like, I mean, it doesn't matter anyway, but. $36? Let me see. You're right. Okay, yeah, it's 36. Correct. Yeah, that's true. Yeah, average is 17 to 20. Something. At least I did slightly above average, but I wish I would have retaken it. All right, chat. Yeah, we got about 13 minutes left, about 13 minutes. Again, non-farm employment data is the prelim payroll data, right? It's the prelim data. It's not, it always happens 2 days ahead of the actual non-farm payrolls. So this isn't non-farm payrolls, it's the prelim payroll data. It drops at 8:15 in 13 minutes. Yeah, I didn't really try very hard in high school. It's a long story. I was just young and dumb and rebellious, I guess is the easiest way to put it. I mean, I'm doing pretty well in life now, and so I don't think it really mattered. I think everything kind of leads you down the path you're on, and, it's all good. I know a lot of people that went to college that aren't really doing great right now, and so I don't know if it's necessarily, yeah. Are you gonna trade the FOMC meeting? Yeah, probably. I'm gonna trade today. I'm just letting this pass first, so we're letting this happen. We also have the Jolts report this evening. We've got ISM manufacturing PMI at 10 o'clock. We got the Jolts job report at 10 o'clock. We got the Fed meeting at 2 p.m. We got the press conference at 2:30, or we got the Fed speech at 2 p.m. or the rate hike decision at 2 p.m. We got the Fed press conference and speech at 2:30 with Jerome Powell. We're going to stream all of that live right here on this YouTube channel. And so subscribe if you haven't yet, guys. Hit the notification bell. Yeah, I just think it depends. Like, I think, like, income-wise, right? Like, income-wise. Like, for me, I started my own businesses, and I make more money now than most of the people that I know that go to college or that went to college, right? Like, I make much more money than they do now. And so I think starting a business is risky, though. So, like, the problem with it is that you can start a business. Most businesses fail. So, like, most businesses fail before one succeed, and so it's a risky endeavor. Okay. I love you.
Love you.
Have a good day. Hey. All right, guys. Anyways, yeah. So, like, I think the pros and cons of each of this, right? Like, by starting a business, you're gonna have a higher ceiling, right? So, like, you're gonna have a higher ceiling if you start a business. You're gonna be able to make more potential money if you start a business, right? But the likelihood of failure in that regard is much higher, right? So essentially getting a college degree will generally earn you less than starting your own business that's successful, but it's a much more stable, much more secure thing. Like having a degree, you're almost always going to get paid more if you work for somebody else than somebody without one, with some exceptions. And so, yeah, it just depends on which way you look at it. Like if you want more stability and good potential, then get a college degree. If you want a high ceiling, like a larger ceiling and more potential, income power, start a business, right? But you got to be resilient enough. Most businesses fail, and so 1 out of 6 businesses fail before 1 succeeds generally. And so if you do start a business, the problem is most people start a business, fail, and then never try again, right? Where you got to keep on pushing and keep on trying, and you got to be resilient. Eventually one will stick if you keep trying long enough, but most people don't. Most people try, fail, give up, go work for somebody else, and just don't do anything. And that's why most people don't end up doing it. Anyways, hope that makes sense. Yeah, learn a trade, starting a business can be solid too, for sure. Well, this business that you're on right now, Plasmo, so like this YouTube channel is a business for sure. But again, like I do a lot of different things. Like my thing was like I wanted stability in terms of skills, right? And so I taught myself software development. Like I can program like React Native, JavaScript, front end development mostly, but I can create like mobile applications as well and do a bunch of stuff there. I'm also a licensed real estate agent, and so and then I also run this YouTube channel, and this certainly makes money. And so I have a couple different skills that I have that'll keep me safe, I guess is the easiest way to put it. It just depends, man. Everybody's different. Yeah, thinking of a business idea is hard, brah. The easiest idea is to monetize your passions. Figure out what you're interested in. Those are the jobs where you're going to have resiliency and be able to actually keep pushing. If you are not passionate about whatever the subject of your business is, then it's going to be a lot harder to succeed. You gotta start businesses in what you know, and so figure out what you know and start a business there is usually the right move, whatever that is. Yeah, I mean, listen, $50 an hour is okay. It's not bad, right? But for business, it's okay. It's like $400 a day, which is good. I mean, I'm not trying to scoff at $400 a day, but I'm just saying when you start businesses, right? Like realistically, you want to get to where you're making $5K a day, right? Like that's the goal. And you got to figure out how scalable the business in turn is. Anyways, non-farm employment data coming in at 183, 184 is what showed up last time. So 183 here is what's expected. Now, again, the question is, how does the market respond to this data here? How does the market respond? What I mean by that is, does the market want more or less jobs? Higher non-farm employment data signals more jobs, economic growth. Does the market want economic growth? I don't necessarily think so. I think the market might want economic weakness because of inflation fears. And so I think if non-farm employment comes in higher than expected, the market might react negatively to it, and vice versa. Although, again, this is purely a speculation. It could certainly go the opposite way. None of the reaction predictions are definitive. Anything could happen here. I don't know if the market's going to go up, down, or sideways from it, but I do think the market fears inflation to a certain extent right now. And I think because of that, a higher non-farm employment report could signal like negative market reactions. Lose 5K a day. I'm not talking about trading, Rocket Man. I'm not talking about trading. In fact, I don't think it's smart to try to make 5K a day trading unless you have millions of dollars in your account. Even then it's still pretty freaking risky. All right, chat, here we go. How hard is it starting a YouTube? I feel like it's almost impossible now. Well, it's hard to do in the trading space. Like, everybody wants to do it, but, like, it's saturated right now. It's hard to succeed. And I think it starts a lot of resentments. Like, some of the most resentful people I meet are people who try to start YouTube channels. They come to me like it's my job to make them bigger and to help them grow. And I might give them a plug every now and then, but they're expecting me to just build their channel for them, and that's just something I'm not going to do. And I think a lot of jealousy and resentment happens, and so it's a hard thing. I think the trading market is really saturated right now. And so I got in early. Like, we started this channel early, and we grew fast early, and so we got in before the saturation, I guess is the point. Anyways, we got 4 minutes, chat, 4 minutes. We got about 1,000 people here live. All right, Nvidia spike it up to 851s here, chat. 851s. We got 4 minutes here. All right, guys. Nvidia at 851s. All right, guys, we got about 1,000 people here live. Again, hit the subscribe button if you haven't already. Hit the notification bell. I'm going to throw this. Should I throw it in sub-only mode? I guess I will here. Hey, we're going towards 140K. I really want to hit 150,000. And we're getting pretty close. Yeah, I think the problem with trading-wise is that people try to make too much money too quickly. So the problem with trading is that people try to take like a $20,000 account and they try to make 5% a week or a day. That's 25%. Like, you're never going to do that safely. Like, you're going to have to risk your entire account, and eventually it's not going to work and your account's going to be bye-bye, right? But everybody wants to get rich and they don't have enough money to do it. And so they just push really, really hard with small amounts of money and end up losing big. It's just a very risky endeavor, chat. So just be smart. Like, you're not going to be able to make 25% in your account weekly. It's just, that's a dumb expectation. And again, if somebody told you you can, they probably realistically just don't know what they're talking about, or they're trying to sell you a mentorship program or a course, right? In the end, small steady gains wins. You know, it's like the turtle and the rabbit. All right, chat, we got 2 minutes left. 2 minutes before we have the prelim NFP data. 5% a day with FX is definitely doable, though, but you're not going to be sleeping in stress 24/7. No, it's not. Again, you've been sold a dream more. You've been sold a dream, brother. It's simply not doable. Reason, like, nothing, like, that is such, like, again, you've been sold a dream by people trying to sell you on success, right? Like, if you look at Forex especially, it's super common. Everybody's acting like they're just rich and they've got all this money and you can make 5% a day. Bro, listen, if you had a system where you can make 5% a day, Goldman Sachs would pay you $1 billion for it, bro. You know why you don't have a bunch of billionaire traders in Forex? Is because they're all full of crap trying to sell you stuff. Be resilient. Be smart. Don't be gullible, bro. Like, come on now. 5% a day, dude. That's 25% a week, bro. That's never mind. That's 100% a month. You think, yeah, I mean, never mind. Anyways, hey, we got 30 seconds left, 30 seconds left. I'm not trying to be disrespectful, but be smart. Like, you're not going to make 5% a day. That's ridiculous. Not safely, at least. You're going to have to risk your whole account, and eventually your account's going to go bye-bye if you do that. All right, guys, we got 20 seconds left. 20 seconds left. 15 seconds left. Hit the live button next to the play button. Make sure you're fully caught up on stream here, chat. We got the non-farm employment change data expected at 179,000 is actually what I'm showing. 179K is what's expected on my end. Let's see what we show up. And here's the report. 192, much higher than expected non-farm employment data. 192 versus 179 expected. 192 versus 179 expected. I use Quant Tower, Robert. 192 versus 179 expected here, chat. Hit that subscribe button. We cover this very quickly. We covered that within a quarter of a second. Again, 192 versus 175, 184 expected. Much higher than expected data here. And again, so far the market has negatively reacted to it. There's the data right there. But they said, trust me, bro. It's brah, in my opinion, not bro. Yeah, higher than expected payrolls or non-farm employment data. Yeah, dude, again, freaking 5% a day is the most ridiculous, ludicrous expectation you could ever have. Like, it's just such a absolutely ridiculous expectation here. Like, 5% a day, dude. Again, you can tell how much somebody knows about trading realistically, like, based off of what they say you can make, right? If somebody tells you can make 5% a day, run away from whomever that is if they're trying to sell you a course or a mentorship program. They truly have no idea what they're talking about. Again, you would be the richest person in the world if you include compounding within, like, what? Like, look. Like, let me show you a graph here, chat. All right, guys, again, let's see if the market reacts positively here. We still got the Jolts report today as well, right? So let's say you got $100,000, okay? And let's say you make 5% every day. Or hold on, let me make sure my math is math in here. Let's say you make 5% a day, right? With compounding, let's just do what? Let's look at where that 100K is going to be. And say, all right, SPY is moving up, Nvidia moving up. Let's see where that 100K is going to be in what, like 30 days, or let's not 30 days. Let's try 3 months. Let's try let's try 90 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. All right, so this is 60. Okay, so this is 60 days, 30 more days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. All right, so that $100,000, chat, in 90 days with compounding is going to turn into $8.5 million in 90 days. Like, such a ludicrous expectation. Again, this is why I said, if you got some type of system that's going to earn you 5% daily, Goldman Sachs will pay you $1 billion for it, you know, but it doesn't exist. And so, you know, you're not going to make $1 billion because it doesn't freaking exist. Again, the real problem. Anyways, guys, the non-farm employment data spiked up. Big spike here, Chad, big spike. We'll see if we hold. Not a big spike, but a medium spike, a mid spike for my young people out there using slang. But no, what really happens though, chat, and the reason you got a bunch of people spewing out 5% daily expectations is because, okay, so say you got a $50,000 account, right? And you have no idea what you're talking about, right? And you just kind of keep adding to a losing position until it makes you money, right? So you got 50K, you somehow make 5%. Somehow you make 5%. So in 50K, somehow you make $2,500 with 50K. Right, which is 5%, $2,500. Somehow you make $2,500 in one day with 50K, taking a massive risk to do it. Like, in order to make 5% of a $50,000 account intraday, you're gonna have to take some big risks to do so. Like, you're gonna have to take some massive risks in order to make that, right? And you might get away with it most of the time. Even you might get away with taking those risks. Right? And so for traders that don't know any better, right? Maybe you're doing this by just kind of continuing to add to losing trades until it makes you money, because if you keep adding to losses, eventually, or most of the time, you're going to make money, right? Because most of the time it's going to bounce back. And that's all good and fine. And that might trick people into thinking they've got some super secret system. But say you make 5% one day with a $50,000 account, taking a massive risk. You might take that and act like you're making that 5% every day. You're like, oh, I'm making this every day. You made it one time. You know, this is what people do on the internet too. They make it one time, and then they start acting like they're making it every freaking day, right? They make 5% one day, taking a huge risk, and then they act like they just make it every freaking day. You know, it's like people that make $10,000 in trading 1 week, right? They didn't make it every week. They make it 1 week. Somebody asks you, hey, how much money do you make in trading? Oh, I make 10K a week. Do you really though? Or did you just make it 1 week and taking a massive risk? Anyways, taking risks like that, the problem is that eventually the check's gonna come. Like, eventually you're gonna take a massive risk and your whole account's gonna go bye-bye. Your whole account's gonna be destroyed. Like, your whole account's gonna go away, right? And because that type of gain is not sustainable, and you have to take massive risks in order to accomplish that. Even 1% a day is not sustainable. Right? And so you got to have reasonable expectations for your trading. The larger percentage you try to make short term, the more your account as a whole is at risk. And so while you might get away with doing that occasionally, eventually your account's going to go bye-bye, right? And that's when and a lot of the time they blame it on something else. They say, oh, I just made a mistake and lost my account. I'm not going to do it again. You kind of have to if you're trying to make gains like that. And so just, again, be smart. Anyways, guys, if you don't want to lose your whole account, try out a prop firm. Try out Apex. Apex is a sponsor of mine. I'm biased because they pay me money. I'm biased. They're a sponsor of mine. But if you want to check them out, you can get 80% off of Apex right now. Apex is a funded account program in futures. Yesterday, we made over $1,000 on this funded account program in futures. We're going to try to build it up today. But we made over $1,000 yesterday. Day trading futures. And in the futures market, you can day trade short, all this good stuff. No PDT restrictions. Let me get this out of the way. And the futures market, you can day trade short, buy market, sell market. No PDT rule in futures. You can day trade the S&P, the NASDAQ, basically the SPY and the Q. And again, you can kind of see we made about $1,100 yesterday in futures on Apex, right? And again, Apex, they give you a demo. They test your skill. This is a $50,000 funded account. The base one's $25K. They give you a $25K demo. If you can make $1,500 without losing $1,500 following their rules, they fund you $25K with a 90% split. And so if you want to try to make crazy, unrealistic gains, a funded account program is where you want to try it. It limits your risk. If you pass it, you get a 90% split once you're funded anyway. And so it's similar to putting the money up yourself. But if you lose, which is most day traders are going to lose, you only lose what you pay for it on that month. So the base one, the first month is only $30. If you lose, you're out $30. Limited risk. Great way to learn how to day trade. Although, again, they're a sponsor. I'm biased. They pay me money. Remember, I have no idea what I'm talking about. Might be wildly wrong about anything and everything I say. Don't sue me. I'm not an investment professional. CFTC 4.41 says hypothetical or simulated performance results have limitations. I also trade off stream. You're not going to see all my trades. Don't copy me. Not an investment professional. But if you want to check them out, use promo code BT, beginner trading, BT, 2 letters. Get you the max discount at all times. Chat, we'll see if we can build up another $1,000 day. We'll see. Anyways, let me scroll back up to the comments section here, chat. Not saying anyone should do it, but you can definitely do it. No one is going to sell you or tell you how to do it. And yeah, there's massive leverage used for it. Again, you are not going to be able to make 5% daily in a Forex account. I don't care what kind of leverage. Leverage is insignificant when we're talking about percentages, brother. You know, like leverage is insignificant. Like anybody can look. Okay. Let's say 5% a day, and let's just use 365 days as the standard of days, even though like stock market wise, it's not open, but we're just gonna use that as an example. So this is saying making 1,825%. Now, this is possible to make this type of percentage gain any given year. You can do it, right? So if you divide that by 365, it averages out to 5% a day. But what I mean is making 5% regularly in your account without risking your account is not sustainable. It's not feasible. You might be able to take massive risks and make 5% one day, but again, you're taking a massive risk to do that. Eventually, if you keep doing that, your account's going to go bye-bye. Like, this is a very self-evident thing for anybody that understands risk management and trading. The problem is that too many people are trying to sell their service, their mentorship programs, their courses. And so, if they told you the truth, which is like, hey, you're not going to be able to make that type of money. You need a large account to make any type of like reasonable gains, and most day traders lose money. It's very hard to sell a course or a mentorship program if you tell people that, right? And so what do the gurus do instead? They say, hey guys, you can make 5% a day if you just buy my course. It's a fugazi though. It's a fugazi. It doesn't exist. It's unicorn dust. It's nonsensical, brother. But hey, it's all love here. Believe what you want to believe. It's all good. Do you think 3 to 5% weekly can be done, John? It can be done, but you got to take massive risks to do it, and you'll probably lose your account. Like, again, if you were talking about just averages, like if I can make 1,000% a year, getting really, really lucky on one specific stock, it doesn't mean I'm making, you know, whatever percentage that is daily, right? So if I'm making $1,000 or 1,000% in a year, let's just say I'm trading Forex, right? It doesn't mean I'm making almost 3% a day, right? Usually it's just from one really big lucky gain, right? So it's not like I'm out here like milking 3% from the market a day. Again, it's just not sustainable. You got to understand, like, again, I'm looking at it like if you look at blackjack, right? Card counting in blackjack, right? Like blackjack has a significant statistical edge if you card count. The problem is that, number one, you're going to get backed off at most casinos, but if you, even with a very clear statistical edge in card counting, there's variance. There's good variance, there's bad variance, there's variance. And so the only way you get around that variance is by having a large sample size, like having a big bankroll to do it. And so, yeah, the smaller the account you try to do that on, the smaller the bankroll you try to do it on, the more likely you are to lose money. And so when we look at that in a trading sense, it's important for traders to really understand, like, if you want to make $1,000 a day, you better have a large account, because if you don't, or try a funded account program, right? Like that's a different way to do it, but there's nuances there too, but yeah. Like I said, if a system was like that was real, why would anyone share it? Because you could make $1 billion if selling it to Goldman Sachs, you know? Nobody's making 5% a day unless we're talking about like big billionaires and millionaires. But again, yeah. I swear, bro, TikTok and social media has blinded people to realities of trading. They think it's just a get-rich-quick scheme that they're going to make 5% a day. I saw a TikTok recently, and look at Tesla rebound all the way back up. You love to see it. I'm in it right now. Let's see if it continues to grind up. I saw a TikTok recently, and in that said TikTok, it was this girl, and I think she was doing the 5% a day argument. I have to go back and look, bro. It's been a long time, but I think she was doing the 5% a day argument. And she gave she was like, yeah, if you took 5K and made 5% every day, by the end of the year, you're going to do this. And like, you could tell she's just pandering to people. Like, she has no idea what she's talking about. Like, it's never going to work like that. And so she's just kind of telling, like, she thinks it sounds smart in her head, right? But she doesn't know any better. And she ends up looking really, really dumb. And the problem is that you take new traders that listen to stuff like that, and then they think it's real, and then it starts this path of people who are just kind of completely blind to the realities of trading, unfortunately, and like they just get wrapped up in it. The truth is, you're not going to make any type of big percentage like that daily. It's just not going to happen. Elite of the elite in investing and trading is 30% a year. 30%, right? And so the elite of the elite investors are going to make 30% a year, which averages out to about 2.5% a month, you know. Now, again, there's some people that do better than that, especially in trading. You know, some people do better than in specifically trading terms. But again, if anybody had any real system like that, you would know. They wouldn't be on YouTube talking about it. I promise you that. Yeah, same thing with steroids in the bodybuilding community, bunch of fake natties. Yeah, bro, that's the most freaking, like, audacious, you know? Like, imagine doing a bunch of steroids and then taking pictures of yourself and telling people how to eat right and diet. Like, bro, get out of here, dude. I see it all the time. It's ridiculous. Again, Tesla at 181. Tesla's moving up. So again, 8:30, we didn't really have any news release, any big news release at 8:30. It was 8:15 is when it dropped. And again, today we got the Jolts report at 10 a.m. So we got the Jolts report. It's the Fed day. Yeah, we got the Jolts report today, chat. Big report. It's the FOMC meeting day. So we got unemployment. Wait. We also have manufacturing PMI. All right, guys, look at Tesla rip. Look at the SPY rip. Look at Nvidia rip. I know that sound. What did you buy? Nothing. I didn't buy anything just now. That sound is specifically there. That sound happens on TOS for a lot of different reasons. Number one, I mean, I'm going to be buying and selling stuff off stream, but that's not why you heard that sound. I have a couple indicators built on using ThinkScript code on TD Ameritrade. Whenever one of those indicators pops up on whatever stock I'm looking at, and it's not the broad market, I think, that sound notification will happen. That's what you heard, to be honest. But I'm not telling you to buy or sell anything in any specific way or anything like that. Just be smart. All right, chat. So we get non-farm data is out. Came in higher than expected. Market mostly spiked on this, which is interesting. Maybe the market's fearing a recession and depression now. I don't know. So we had the non-farm employment change data out. All right. We have manufacturing PMI too. Bunch of stuff dropping right now, chat. So be ready. Yeah. All right, we're gonna get ready to day trade here. Let's get ready to day trade on Apex. Let's do this. All right, so we are in our account from yesterday, the same one where we're up $1,100. Let's see if we can build a profit up again today, chat. Let me see if we can. Again, my idea is to trade choppy, to be honest. Like, attack choppy ranges here. Haven't traded it all today, but let's get ready. Yeah, we'll keep it like this. I'm trying to figure out. All right, I'll put the timer up in a second as well. I don't care about what the price is there. There we go. All right. Look at the NASDAQ spike up here. I'm going to short this. Kind of a risky endeavor here. Man, I can't see my P&L. Okay, we're up 15, 20, 40, 60. All right, we're going to scalp that, take that out, build up a cushion first. We're up $55 on the day here, scalping. I'll try to put my P&L up here so you can see it, but I realize I'm blocking it now, but it's all right. All right, we're up 50 bucks, basically. 55 technically, but that's all right. You can see markets are starting to spike here. All right, we'll put the timer up here. We still got hour and 22.5 minutes. Here's the timer. Yeah, we got manufacturing services PMI. Yeah, we're gonna stream the live meeting too. All right, so we did short the top and it worked. Now we gotta just be patient, I think, here. I don't know. I ended up taking some of my Intel position off. I'm still holding a base position, but I sold a lot of it. Again, it's just too risky. Intel is just taking too long to bounce back for me. I'm not telling you guys what to do. I don't know what you should do, but... Alright, so we did get that pullback here. I want this this accumulated distribution line off my chart. I don't care about any of that stuff. I'm mostly looking at other charts while I trade this anyway. All right, Chad. So we did dip down a little bit. Again, I'm ahead of this FOMC meeting and all these big reports. I'm gonna kind of cover choppy action. I'm gonna attack choppy action. I think that's the move, personally. But I don't know. Yeah, I mean, Dan, who told you to trade a triangle, bro? I don't even think I've used the word triangle in about 20 years. What's a triangle, bro? I don't even know what a triangle is, dude. No, I'm just joking. But again, I definitely didn't tell anybody to trade a freaking triangle. I don't tell anybody to do anything, you know? And I think the mistake a lot of people make is like they gamble. I think sometimes gamblers just can't handle it and lash out at people, right? Like I know a gambler personally, heavy drinker. Every problem in his life is blamed on somebody else, and like in the end, a lot of them just can't take accountability for their actions. I certainly didn't tell you to buy anything, sell anything, do anything. I am the top 3 worst traders of all time. This is literally my disclaimer here. Remember, I am terrible, have no idea what I'm talking about, maybe wildly wrong about anything and everything I say. I do trade off stream. Do not copy me. Do not sue me. I'm not an investment professional. Understand CFTC 4.41 and all the stuff underneath it. It's hypothetical or simulated performance results have limitations, chat. Now, again, my TOS account's got about 80,000 in it. So, I mean, this is not a paper account by any means. Yeah, he's definitely trolling. Does the federal funds rate have a huge impact on the market? Oh, more so the economy. T. It's short-term interest rates is what it is. So short-term interest rates are influenced by the, Fed, and they cause people to either spend more or less depending on what happens with them. All right. Yeah, what's the drama with ICT I'm seeing on social media? Can anybody educate me on this drama? I don't know much about any of it. I'm not really a big follower of other traders. But what's going on here? Microsoft, is it going up again? Oct. Bro just getting clown because he can't trade. Oh. Why? Yeah, I mean, again, I don't know about anybody specifically. I don't want that smoke from the ICT crowd. Like, that's a huge community. I'm not trying to, again, I don't know anything about anything. Again, I think, hopefully, though, over time, I think people will probably start to appreciate how I run my channel. Over time, I think people will start to appreciate it because I really do try to just be honest, right? Like, I don't even claim to be a good trader. I don't claim to be profitable. I don't claim to be an expert. I did like last year, I was green in unrealized profits at the end of the year. I am green this year in at least unrealized profits, although I think I'm probably green in realized profits as well. My overall P&L year to date is positive on TOS. So, but again, with all that said, I don't claim or guarantee anything. I would rather just be honest with people. And I still make money doing this. I make my money on the back end, though, not the front end, which is like I make my money through marketing, not selling courses. I'm going to short this again. It's a risky short right here for sure. But we got a little cushion we can play with to see if we can roll this into more. There we go. $20. All right, just going to scalp a little $20 gain. We're up $75 on the day here, chat. Hey, thank you, William. You just claim to be handsome. Oh, dude, I'm definitely top 3 most handsome trader in the world right now, as well as most humble of all time ever in the world, for sure. Top 3 ever in the world, for sure. Did I say ever in the world? I think I did, but top 3 for sure. All time ever. Anyways, AMD, guys, up to 150. We bought the dip yesterday. We're completely flat on it now. We're green on the trade as a whole because we already took profit. But still. AMD bouncing back. Microsoft almost back up to 400. Has Microsoft really fallen off that much? Damn, dude. Microsoft dropped. Okay, Microsoft hit highs of 430. Honestly, I'm starting to forget about what the share prices are in some of these. Yeah, I'm not gonna say anybody's good or bad. I don't know them enough to say good or bad things about ICT. So, I wish their community the best. I don't know them super well. So it's all good. It's all love here, from my end. I'm not gonna speak negatively on them or anything. What I will say though, man, is some technical traders are out of control. And I'm not talking about ICT, just to clarify. I'm not talking about ICT or whatever. But some technical traders are just out of control here. And it causes problems because it's look, I look at economic data, fundamental data, company health, PE ratios and all these different things. And none of them are true tales of anything, but you can use them to gather company health, which is fundamental, right? Now you get economic reports come out that are going to influence markets. You see this regularly, right? The FOMC meeting, CPI, PPI, PCE data, all these different economic reports, essentially fundamental reports come out. And I say this, I've said this before, and I do repeat myself sometimes here on the stream because I think sometimes it's best for people to really consume if I repeat. And so forgive me for repeating, but I'm going to repeat this again. You got some technical traders that are so freaking technical biased that they see every major move as being a technical move. And it's just not the easiest example that I always use when I talk about this is you can have CPI come out much higher than expected. So, right, say CPI is expected at, let's just call it 3%. And say CPI shows up at 4% and the market dumps 5 to 10% from that, because that's a really bad miss, right? If that did happen, that's a really bad miss, and the market dumps 5 to 10%. Again, you got some technical traders out there that are going to somehow claim that 5 to 10% drop is because the freaking 12 SMA and the 325 EMA crossed over, the 379.50 support area, and now That's what's causing the 5 to 10% drop, not the super high inflation data, right? And it's just a ridiculous like concept to try to believe that. And then when you try to say, hey, no, like, yo, this is just from freaking economic data coming out, this is from inflation data coming in high, then they start arguing with you about it. And at a certain point, you got to just be like, all right, okay, you know, sure, the market dropped 5% because of a moving average crossover. Gotcha, you know, just a ridiculous like concept. And again, I hope you guys don't like, technicals can work. They're not going to work like that though. They're not going to cause massive 5 to 10% dumps immediately. The rule of thumb is that if you see a big drop like that randomly, it's almost never technical. Like, it's almost never based on pure technicals. Like, if you get a huge percentage drop, it's almost always from some type of fundamental release, some type of fundamental catalyst, maybe really bad news coming out for a tech stock, maybe economic reports, something like that is causing it almost always. There's some outliers, I'm sure, but technical moves do not cause action like that. In terms of like, when we're talking about the broad markets, like the SPY, the Q, stuff like that, when we're talking about the broad markets, they're not going to cause a 5% drop in the S&P, a moving average crossover. And so it's important for people to understand technicals can work, super zoomed in, they can work, right? But if we're getting major reactions like that, it's almost never technicals. It's almost always some type of catalyst, like fundamental catalyst related. And so it's important that traders really understand that, because I think with technicals, it's kind of like you can create all these different theories on these technicals working, and it's so complex and nuanced that sometimes you can trick traders into believing it, you know? But you got to understand the true nature of markets to really understand what's going on, and I think it's hard for a lot of people to do. Yeah, I'm not saying everybody, Ryan. I'm saying there are some technical traders that certainly behave that way. I've seen them a lot. Yeah, ever lived, ever in the world. Hey. Yeah, you can support any idea with technicals, but, you know. My wife keeps buying on Amazon, so I'm placing calls. Hey, good luck, Dan. Yeah, 100% silent. Technicals are fine, but if you're not considering macro events and catalysts, 100%. You got to understand economic reports is really what it is. A lot of people are oblivious to economic reports like CPI, jobless claims, unemployment, whatever it is. And so they see these big moves happening, and if it confirms their bias, then it's even harder to talk them out of it, right? So like, say you got a bearish moving average crossover that happens, and say unemployment spikes to 4.5%. And the market dumps all of a sudden, right? If it confirms your bias on the bearish moving average crossover, it might be a pleasant thought to believe that your moving average crossover caused this massive dump in markets. But again, it's just confirmation bias. It's not, I think you have to be resilient to that type of stuff and instead understand like the bigger picture of markets, I think, you know. Harder thing for people to do. Yeah, don't sue me. Not an investment professional, you know. Top 3 worst technical traders in the world right now, of all time ever. The people you're talking about are definitely beginner traders. Not all of them. Like, I know some people that have been trading for years and years and years, and they just get wrapped up in technicals. And it's only technicals, right? So they don't really watch macro, they don't really watch fundamentals, they don't really watch economic data. They just get so wrapped up in technicals that they get blind to like the big picture of things, I think. The poll is set on 50-50, is it really? All right, this song's a little bit too fast paced. I gotta change it. Sorry guys, let me change this song. Yeah, I can't listen to that. It's too much, man. Alright. Again. I'm gonna have to bust out the freaking glow sticks and Vicks Vapor Rub and start freaking with that type of music. It's just too much, man. It's too much. It's too much. It's too early for that. Again, AMD at 150s. I have a strategy that's 85% successful. Just have to have, yeah, I mean, listen, 85% of the time, it works every time. AMC short squeeze music. AMC earnings are coming up here, chat. Is it time to buy AMC? No, I don't have any of that, Rocket. Sorry, bro. News confirms your entries. I mean, yeah. AMC, guys, 293s right now. Pre-split price of 29 cents. Looking rough. Barcoding, too. AMD starting to move up. We're actually green on AMD now. You love to see it. Back up to 150s. Hit 143.90s as lows. Again, Apple. Apple's all the way down to 160s again. Should I start buying it up? I don't know. Let me see. I'm green on the position here. My average price is 168s for Apple. I might add to it, though. I might wait till after the Fed meeting is over, though. Actually, no. Apple has earnings tomorrow. I'm not going to mess with that. I'm sorry. No, there's a lot of things driving the markets. Bonds are certainly what's driving the economy, which influences markets for sure, right? If you look at, like, the TNX, you know, we're at 4.6%. Yields are still high. And again, generally yields move inversely with the stock market. I don't understand how now. How much you want to bet J Powell brings up recessions today? I'm not sure. He might. He'll probably at least say it once, I guess. But yeah. I'm not sure. We'll see. Again, we got the Jolts report today, chat. Remember, the Jolts job report is in 1 hour. It's in 1 hour, chat. So just be ready here. We'll see if we get anything good today. I'm hoping we get some good stuff. Again, it's the Fed meeting day. We're up $75 here. I'm going to sell this. All right, we're in another trade here. Down 20. Now we're up. Now we're down. I'm going to trade with this cushion and risk this cushion on the day. We're at 2 contracts here. Chat, 2 contracts. We'll take 3. 3 contracts. We're flat on the position now. Unlucky spike. Ugh. Don't do it to me. I'll give it a little bit of time. A bad spike here. I'm going to have to cut this. So we're down 270, 265 on the day. We made $1,100 yesterday. I don't know whether I should. All right, we'll take a risk. All right, we have 3 contracts now. Spiking up. We'll take 5 contracts now. Again, I'm willing to lose this account too because we've had this account. I'm trying to make more on it. I want to trade chop, like choppy behavior, but 5 contracts. We're almost flat on the position. Though it's a big position here. It's not small. Boom. All right, there we go. 2 contracts left. Boom. All right, we're green on the day. We're up 75. 85. We'll give it time. I might add to this too. I'm going to add to this. There we go. All right, we just took half off. I'm going to cut the rest. So we turned a $250 loss into a $130 gain. So we're up again today. Whew, nerve-wracking here. We're not used to... No, this is a PA account, Yair. Again, we made about $1,100 on this PA account yesterday on Trade-Evade. We are now up about $130 on the day. Definitely a risky day, but that's all right. We got to play with these accounts sometimes. Take a little risk. I'm not sure, Mo. That's up to you, brother. Whatever you want to do there is up to you, bro. Again, I can't tell you what to do there. What's the Fed meeting about? It's the FOMC meeting, Ivan. It's the rate decision and press conference that happens every 6 weeks. Yeah, SQ is dumping down. It's at 68. This is Cash App. Yeah, I mean, this PA is one that's been sitting for a while, Yair, and so it's just kind of like it's been eating money in my account. So I took some crazy risks on it yesterday and just playing with this PA. It's been on Trade-Evade, and I'm not really a big Trade-Evade trader, and so that's kind of why you see me taking a little bit more risks on this one because I'm just kind of, it's been sitting for a while. I've been funded in it, but you know, you do have the monthly fee, and so instead of just letting it sit there chopping up the monthly fee, I'd rather just take some risks. If I lose it, that's fine, and then I'll go back to Quant Tower, you know. I mean, either way, guys, like my TOS account's got 80 grand in it, so like I don't need to get funded by these at all. Like it's not something I need. I've never have needed to get funded. I think most experienced traders don't need to get funded, but if you don't have that much money and you want to get started, I think it's a great way to learn, great way to get started for cheap. If you lose, it's not the end of the world. If you pass it, you get a 90% split. So in my opinion, it's limited risk. The base one, you get 25K in funding on Apex. It's like $30 if you use my link right now and use coupon code BT. It's $30. If you pass it, you get 25K in funding. To pass it, you got to make $1,500 without losing $1,500 and following their rules. And so again, limited risk, $30 if you lose the base one. If you $30 a month. If you lose it, you're only out that, so it's very small. But again, 90% split. You get to keep your first 25K once you're funded. If you do pass it, in futures, you can day trade, short, buy market, sell market. Very similar to day trading stocks. I'm basically trading the QQQ price action here. So it's a great way to learn day trading with limited risk. Although, again, they're a sponsor. I'm biased because they pay me money. You know, again, if you want to check it out, here's the link. What do you think about Disney taking a stake in Epic? Yeah, I mean, Epic is known for Fortnite. It just depends. It depends on, wait, doesn't Epic, what other games do they have? Do they have, Epic Games, Fortnite, Rocket Racing. What other games do they have, though, I guess is the question. Yeah, it's all right, Sam. I'm just gonna, I'm building that up as kind of like a net, as kind of like a cushion, Sam, I guess is the easiest way to put it. Yeah, I mean, again, the problem with buying out games like that, while Fortnite is huge, typically games have a limited window of relevancy. And so what I mean by that is, like, typically video games don't stay relevant forever. And I think so if they spend too much money on it, it could be risky. But again, maybe not. I don't know. Again, I'm not a big Fortnite guy. My kids play Fortnite, though, and so it's still pretty relevant if my kids want to play it with their friends. Yeah, I mean, regardless, I mean, they make their money because, again, I understand the business model. I'm sure the companies are making money, but that's what businesses do. The reality is, I think, regardless of how they're making their money, I think it's important to understand that these funded account programs certainly serve a purpose. I think you got to look at it objectively and understand that a lot of paper trading accounts cost $50 a month, the same price as a lot of these challenges, right? And so if you're spending about the same as a paper trading account, and for that, you're getting a demo account, but also more potential than a regular paper trading account, I think it's completely understandable. And I think it's incredibly useful for traders. It teaches them how to trade specifically under pressure. Because again, most day traders lose. If you put up $5,000 trying to day trade, you're probably going to lose it. And so for traders, especially in the beginning, it's about finding that middle ground of pressure to where you're not risking $5,000 and losing that like most new traders do. But instead you're risking $30. So you're still risking something. And again, when you think, like, a lot of demo accounts cost the same amount, right? I think it makes perfect sense to try this in the beginning. And I don't think we can really knock them for that. I think it's perfectly understandable for traders to use them. And I think it's a good way to learn. And what really matters is whether they pay out. And they do. Apex has paid out over $100 million. Yeah, like DOS Pro used to be, what, $150 a month to paper trade. So yeah, data's not free, you know. Any data, futures data, and all that stuff is not free. No, TradingView data isn't free. So, like, an example, what I mean by that, Nick, is if you try to go on TradingView, you're not going to have live quotes, right? If you want live futures quotes, you're going to have to pay money for it every month, right? So it's not free. And again, if you think about it in that regard, it's the same thing. Like, data costs money. Yeah, I think sometimes people are just kind of desperate to criticize, but I think when you look at it objectively, it serves a very valuable thing for traders. I think most day traders lose. I don't care who you follow, what mentor you have, you're probably going to lose your first couple accounts in the beginning. Now, for your first couple accounts, you can either have a funded account program where you're risking $30 a month, you're still risking something, you're still working towards something that's teaching you how to trade. Or you can risk $5,000 and lose that like I did in the beginning. I would rather go with the first one, you know, but. All right, guys, we're going to short this. Oh my gosh, I just missed it, dude. I was like, hey, I'm going to short this top, and then the market just falls. I'm still kind of bummed, dude. Ugh, that hurts. All right, look, we'll take 2 contracts, try to fix our average, but I'm genuinely a little bummed. I was about to say, hey, let's short this, and the market turned right as soon as I said that. We're about flat now. Let's see if we get a good little dump. All right, now we're slightly green. Ugh, it hurts. All right, we're flat. I was just about to short that top too. It would have been a beautiful trade. All right, there we go. All right, we took half off here. We're green now. I just wanted to limit my size just in case it retraces, which it just did. So I just saved some money getting out there, but we'll give it some time. This is a 1 contract position, so it's chopping a lot. Again, my idea is to trade the chop today. I'm going to go ahead and add a little bit more to this, I guess. Again, I think it's FOMC day, so the probabilities that we're going to have choppy behavior in stocks is higher. And so, again, this is basically the QQQ price action. And so I think attacking this chop today makes a lot of sense, but I might be wrong. Don't copy me, not an investment professional. as I say that, just getting dumped on. It's all right. We still got 20 minutes left until the market opens. I don't know if I want to add to this or not. I probably don't. I'm just going to let it work. I do think we have very choppy behavior, so I'm really tempted to add to it, though. But, and again, we're flat on the day now, so we already had 140. Hey, there we go. Now we're very green on the day. Now we're flat overall in the position. 2 contracts here. Here we go. All right, we just took half of that off, locked it in. We're up about 100. We were up about $100. Now we're retracing. I think I have to just be patient here, though. I might add back now that we are back up with a cushion of $100 or so. All right, so we just added more to this. We're right at the top of the range is really what I'm attacking here. All right, now we're flat on the day again. I don't want to let this get out of control, so I'm trying to be patient with it. We're green on the day technically and gross. I don't know about net, but I like the trade. I'm right at the top of the range, and I think this could dump quickly. If it does dump, we're back to flat on the position, green on the day. It's just chopping so much ahead of the opening bell. The opening bell's in 18, 17 minutes. Come on, break down. All right, we took half off of there, locked it in. We're up about 160 on the day now. I'm trying to show you my P&L here just so you guys can see it. No. I'm gonna add to this short. I don't mind risking when I'm up on the day. It's so choppy ahead of the opening bell, but I don't like that move at all. So we're down 80 bucks on the day. We tried. I gave myself a pretty good chance. We made 1,100 on this account yesterday. And so we gave ourselves a pretty good chance, but it just ended up ripping up. We might wait until after the opening bell and trade the chop again. Look at Nvidia rip up, though. That's what's dragging the market up. Yeah, this might have been a risky trade. All right, we're almost green here on this huge retracement back down, this fake out. All right, we got 2 contracts. Very risky trade here, chat. I wouldn't copy me. All right, we just took half of that off. I like that big up wick, though. Sometimes these wicks can fill, though. I don't know if I necessarily want it to fill. All right, there we go. We're green. We've been basically sitting flat in this position. My hand's over the cover button. I'm not going to let it run up against me too much. How long do we have? We got 14 minutes until the opening bell. Back to basically flat on the trade. We're starting to run away. I'm just going to get out. We got out exactly flat on that position, so that's fine. Probably, Brian. You could probably trade on any with a regular account. Yeah, so we're going to end this poll because we already had the non-farm data come out. Are you bullish or bearish on today's Fed meeting? All right. So it looks like getting out there was the right move. We did end up spiking back up here. All right, remember, we got the Jolts report today, chat, in about 45 minutes. For the Jolts report, about 45 minutes. Could be transitioning from inflation to recession fearing. Matt, certainly possible. I started, no, Jonathan. I started using Apex last month, and so last month, yeah. So we're recently starting to use them. I think it was last month. It might be the month before, but we're recently starting to use them. And then you guys know me. I trade pretty slow and small. SQ dumped all the way down to 66. Yeah, I'm reading this Twitter conversation about like spouses and money, and it has to do with like spouses and money. Like I said, I'm very lucky that my wife got with me before either of us had anything. Like, I had no money, no real job at the time when I met my wife. Certainly no money. Didn't even have my own car, So shout out to Carol, a real one, Hey, what's up, Sammy? Fresher tasting coffee. My coffee was pretty good today. I can't drink too much caffeine though this morning. All right, guys. Hey, we got the Jolts report. Let me put this number up. So the Jolts report came in at 192. Manufacturing PMI, 10 a.m. We did have non-farm employment data showed 192K versus 175K expected. $92K versus 175K. All right. Again, the Jolts report comes out at 10 a.m. Bet you're handsome. That makes a big difference, Yeah, I was talking to somebody the other day about like alpha, beta, sigma males. I don't know if I buy into all that stuff, but like I was quiet. I was a shy kid. I wasn't like I certainly wasn't the alpha male where I was like talking and like the center of attention in some circles. I don't know. It depends on which circles. In my friend circle, maybe you could call me like the center, but mostly I was like quiet and like reserved. I was mostly shy. Like I'd love to act like I was just, you know, I got options, but I was really just freaking shy. So again, AMD back up to 150s. We're now green on the position from AMD. Market opens up in about 8 minutes. Yeah, Kara and I have been with each other for 14 years. 14 years. All right, chat. 8 minutes. Yeah. Yeah, Matt. Nope. Wrong shub. Not 37, brother. Guy who came up with the alpha dog. But yeah. Okay, this is too much. Stop it. Freaking crazy music. Who listens to that stuff, bro? Yeah, that's the nature of bull bear arguments. People are pretty split down the middle. Yeah, super micro earnings yesterday. Bonds are dipping down a little bit. Super micro earnings yesterday did not have a good favorable reaction to it. An ambivert, let me look up what that means. I know what it means. It's somewhere in the middle, I'm sure, but yeah, yeah, just using context. I figured it was somewhere in the middle. Yeah, I'm probably that, right? I'm probably a little bit, you know, if you watch this stream, I can be very outgoing, you know? So like I don't necessarily like being, I'm kind of a homebody. I'm not really somebody that likes to be incredibly outgoing, but I can be if the situation justifies it, you know? So like I can be really outgoing and social and friendly and, you know, but I can also be very reserved and shy. It depends on the situation. I like the Mortal Kombat soundtrack, but not when I'm trading. You know? So I like it, just not when I'm trading. All right, so over the past 5 years, if you buy crypto in October and sell in April, you made about 1,500%. If you buy crypto in May and sell in September, you lose 30%. Be careful buying stuff in May, Chad, I guess is the point. All right, chat, we're back at the top of the range here. I'm going to try to short this again. 2 contracts short the NASDAQ. All right, we just made 40 bucks. We're up another little bit. Shorting the top of the range here. We might add to this one too. I'm going to add to it. 2 contracts. Flat. Very choppy range here is what I'm trying to play, but I wanted to give this a chance, but it's so choppy. Here we go. We're back to flat. Such a choppy range. There we go. All right. Now we're green on the day. All right. We're out. We're up $55 on the day now. Scalping this choppy range here. I figured we were going to be choppy. We got 2 minutes left, though, so I got to get out before they open. But we are starting the day green effectively now, chat, so that's nice. Yeah, I mean, that's the max amount of contracts you can use in any position, Wonder. All right, so we are back down here. Market's about to open in 2.5 minutes. All right, here's the opening bell. I'm not sure, Tony. I can't. If you want to give me your name, I can look up what you said. But if not, you know, I'm not sure, dude. The only people I really block are people who are consistently just trying to disagree. You know, like, again, like, I think to be a member of this channel, you have to be balanced. You have to, like, you can't. I say a lot of things that people might disagree with. And that's okay. People disagree with things. That's normal. That's normal life, right? But you got some people who can't handle that and get really emotional. Like if I don't like Peloton and you love Peloton, you might hate me. If you're really emotional about it, you might turn into just a hater because you're so emotional about your Peloton position or your short bias thesis or your, you know what I mean? Like, or your crash predictions, you know? In the end, I'm not sure if that's you or not. I don't really know. I don't really remember who that is or anything like that. So I'm not sure, bro. Tesla rip it up at the opening bell. The market's coming back down here. Again, we're going to attack choppiness behavior because, again, I think the market is choppy today leading into the Jolts report. So, again, we're going to attack choppy trends, choppy markets. And I think the behavior we're getting in markets right now is choppy. I'm going to short. All right, we just made 50. We're up 110. Back up to the top of the range. I'm going to short this now. Risky trade, but we got a cushion. Here we go. All right, we made another $20 or something like that. Watching Nvidia here. I'm watching Nvidia close. Nvidia at 860s. Nvidia's ripping up big. All right, we just made another $80. We're up $205 on the day. Tesla now green on the day, technically. Nvidia starting to bounce back up. We're watching this. Only thing I disagree with what you say is regarding Jake Paul. Yeah, I mean, Jake Paul's gonna lose, bro. I mean, Jake Paul's gonna win, and I don't want it to happen, right? But I think people are so desperate for him to lose that they overpower logic in their heads. Tyson's 60 years old, bro. He's like, again, you can say Tyson is an amazing boxer, or was an amazing boxer. But one of the things that happens as you get old, specifically, you become weaker, more fragile, you lose power, and specifically you lose speed. Okay, I don't care what little 20-second clips Tyson shows you. I bet you Tyson's breathing heavy once those clips end. I promise you. And so if you think that Tyson is going to somehow be able to keep up with Jake Paul, again, you're just really biased against Jake Paul. And I get it. I don't like Jake Paul either, but like, it's freaking Tyson's 60. Like, you gotta use logic, I think. And I think people get really wrapped up in it in that way, you know. But hey, it's all love. Whatever you believe. I mean, listen, I hope I'm wrong. I really do. Anyways. Yeah, I'll be here to say I told you so, Jonathan. I mean, type, I think you want that to happen, but I don't think it's going to happen. Again, watch. Well, again, I'm going to be here telling you I told you so afterwards. And then you know why I predict things. All right, Nvidia getting right back up there. Then you'll know why I'm the top 3 greatest predictor out of all time ever in the world. I might be wrong though. Don't copy me. Not a predicting professional here, chat. Yeah, he's got a puncher's chance. It's just not gonna happen though. Jake Paul's about to win. Like, Jake Paul's 20 in his 20s. He's big. He's young. He's fast. He's not even really a good boxer per se, but he's fighting a 60-year-old. I don't care who it is. You know, he's fighting a 60-year-old. You know, with no cardio, 0 cardio. Of course, Tyson's showing you him being really fast for 30 seconds, right? The problem is this fight's lasting for 40 minutes or whatever it is, you know? All right, weakness showing up in markets, chat. Weakness showing up. All right, I'm going to buy this dip. We got 1 contract. Let's get a bounce back here. We will add to this risk whatever we've made on the day plus. All right, half off. All right, we are up 360 on the day. Grinding it up today, Chad. Grinding it up. I wonder what my accuracy is like today. We are up 360. Yep. We are running 76% accuracy. Let me show you my stats today, Chad. I'm excited about it. We're up about 300 net. 300 net. Oh, yeah. I will take this. This is my stats today, guys. So far. These are my stats. We're up about 282 net. We made 360 gross. We've had 19 winning trades, 6 losing trades. Gives us a green percentage of 76%. Yeah, pretty solid. You can see my graph here. On the right side, taking swings, but that's okay. We'll see if we can continue this pattern here, chat. Nvidia breaking down a little bit, so stuff's looking a lot weaker now. We'll see if we can keep it on today, guys. Yeah, I mean, people remember Mike Tyson from the 90s and you know, I get it, but you know, I think people really want Tyson to win, and so they get so emotional about it that they start just they're so desperate for it to happen, which really means they're just getting too wrapped up in the fight, right? Like, it's just marketing. That's what they want. They want people. Again, Conor McGregor, the wealthiest MMA fighter in the world. How did he make all that money? He made people hate him, right? He probably isn't even half as bad as he puts himself out to be, but he makes people hate him, right? And when people hate him, they pay to watch him lose, right? And he doesn't care. He's making so much money no matter what. It doesn't matter. But that's the point, is that he's making people want to watch, regardless of whether they want to see him knock somebody out or get KO'd. Jake Paul's doing a similar thing, although Jake Paul has noticeably less skill than Conor does. But, you know, he's fighting a 60-year-old. It doesn't matter, you know. I guess you don't hold a lot of value in skills over strength. It's not even strength per se. It's cardio. You could have all the skills in the world, but if you can only implement them for about 15 seconds before you get tired, and your power is much lower than it ever was, then what's the likelihood that you're going to actually be able to beat the person that can do it for 30 minutes? Very, very low, right? You could have all the skills in the world for 15 seconds, but if it can't go past that and you get tired and gas out after that, it doesn't matter how good you are. You know, and that's the thing people are missing. All right, guys, we got the Jolts report showing up at about 23 minutes or so. 23 minutes for the Jolts report. Yeah, I mean, Tony, I don't know, dude. I don't know who that is or like what it is. I can't look up anything, so I don't know. So we're starting to head up. I am going to short again, probably. All right, so we're short one contract of the NASDAQ here. Green. All right, we just made another $75 or so. We are up $440 on the day. Powell's meeting is at 2 p.m. Eastern Standard Time. Yeah, so we do have PMI data. Do we have, let me see. So yeah, we got PMI data dropping. Regular manufacturing PMI for April drops in about 5 minutes. It's expected at 49.9. And again, the theory of here, choppy action ahead of FOMC rings true so far. It's got to be pretty high probabilities here, chat. So again, we're bouncing back up here. Tesla's still flat. Nvidia, though, guys, is back over 850s. Now, we've traded the chop so far this morning. AMD back up as well. AMD up to 150 as well here. All right, so we're popping right back up on Nvidia. Nvidia hitting the previous market highs of 854.60s, 855s just hit for Nvidia. Still moving up. Again, I'm not going to short this yet. I'm going to wait. We still have about 2.5 minutes left until manufacturing PMI goes live. 2 p.m. Eastern Standard Time. Yeah, experience is good and all, but again, Tyson's only going to be able to have 1 or 2 flurries of punches before he gets genuinely tired. And when you get tired, technical skill goes out the window. Like, that's what a lot of people are just so desperate for Tyson to win. They just overpower logic, man. And again, maybe I'm wrong. Maybe I'm, I'll eat my words. If so, honestly, I hope I'm wrong. I truly, genuinely hope Tyson wins. Like, I will celebrate if Tyson wins. I promise. Like, I don't care how wrong I was. I don't care how much I talked about it. Like, I will literally, like, legit celebrate if Tyson wins. That's just not about to happen, though. Unfortunately. I hope it does. All right, Nvidia pulling back some, chat. Again, we got to wait about 2 minutes, about a minute left until manufacturing PMI. Not really a huge release. The bigger one is the Jolts report that drops at 10 o'clock. We also have Jolts, and we have ISM PMI data dropping as well in 17 minutes. So big reports dropping, and then the Fed meeting later on today. So it'll be a big, busy time. Still very choppy, though. I mean, our idea worked. Remember, we told you guys we would target chop, and that's what we got today. We'll see what happens ahead of the FOMC meeting, too, because that's when, we might even get more choppiness. We'll see, though. All right, so back down to the top, at the bottom of the range. Oh, I'm sorry. Manufacturing PMI is out, chat. It came in at 50 versus 49.9, basically neutral as expected. Not really a huge report. It didn't really move markets much, but we'll put this up on screen. It came in at 50. Slightly higher than expected. Versus 49.9 expected. 50 versus 49.9. AMD did bounce, though. It's starting to move up. Again, Jolts report coming out too. Choppy sideways action is going on. Nvidia still bouncing, though. So AMD back up as well here. Yeah, I mean, SoFi, I'm in it, but I'm not in a huge position. Mike wasn't usually the long distance fighter from memory. He was the KO guy. Sure. But again, his powers. Again, watch the Roy Jones Jr. versus Tyson fight. People make excuses, but I promise you, Tyson thought that was going to be his last fight. Tyson did not want to embarrass himself in that fight. He did not want to look bad in that fight. Watch Tyson versus Roy Jones Jr. That happened 2 or 3 years ago, right? And tell me if you think Tyson looks like he can knock out anybody right now. He didn't, personally. He looked pretty weak. He looked slow. He looked like a shell of his former self, which is kind of what anybody's going to look like at 60. You know what I mean? Like, that's the, you know, again, people are intentionally blind to the realities of it, I think. I think it hurts to look at objectively. Nah, they were trying to KO people. They were hitting each other in the face. It just wasn't any power behind it, you know. All right, chat. 12 minutes. Dow Jones is looking pretty weak, weaker than the rest of the market. Although, again, the market's pretty flat. All right, chat, here we go. Get ready. All right, so sideways here. 10 minutes, chat. 10 minutes here. Let's see what we get. All right, guys, big dip. All right, market's turning down here, turning back around. Let's see if we got any economic reports coming out. But yeah, I don't really see much. All the way back to the bottom of the range here, chat. We got 9 minutes left. All right, chat, here we go. Get ready. Again, we're probably going to sit on our $500 roughly profits on the day here in this account. This is our PA funded account on Apex. We're funded $50K on this account. We're up a decent amount on it. We're gonna see if we can continue to make money on it. All right, Jolts report again. Choppy again. What did we tell you guys? We told you guys the market would probably be choppy this morning. What have we gotten today, chat? Down, up, down, up. What does this mean? Choppy behavior. I'm telling you, that thesis, I'm going to start taking some size with these trades. I'm telling you, I'm going to start taking some size with these trades. Ahead of FOMC meetings, super big edge in choppy trends, in my opinion. It's not always going to work. I certainly am not guaranteeing anything's going to work for you, of course. All right, chat, here we go. 7 minutes left until Jolts report comes out live. 7 minutes left. All right, dipping down a little bit here, chat, dipping down. All right, guys, Dow Jones bouncing a little bit, but pretty flat. Again, sideways action here. Yeah, I was taking some pretty big size on that account today. All right, team. 4 minutes left. All right, guys. You guys ready? 5 minutes. Market's still down to the bottom of the range here. Tesla's still up there testing the previous closing price of the red to green level. Now we are chopping back and forth here. Nvidia chopping back and forth as well. Again, we got the Jolts report going live in 5 minutes here. 5 minutes, chat. SQ is dumping down here. I wonder if it's time to buy that dip. I don't know. I think I'm going to just wait. All right, chat, here we go. I'm trying to be patient. I really am. I'm not trying to take any crazy big size or anything like that. I'm just trying to chill and sit tight and wait. All right, chat, be ready. Market's still testing the bottom of that range. Tesla broke over 183s, almost up to 184s here. All right, where's Amazon at? What did Amazon end up doing? Amazon's still doing okay. Still running up, still green on the day here. All right, chat. A beautiful 2.5 minutes left. Market dumped down a little bit. Is it time to buy the dip? I don't know. I'm going to wait. We got the Jolts report going live. Jolts report is expected today, chat, at 8.7 million. Last time it showed up at 8.8 million. The question is, what does the market want? Does the market want economic growth? If the market wants economic growth, it wants more job openings. If the market wants less economic growth because of maybe inflation fears, then it wants lower than expected Jolts report. Again, expectations are 8.7 million. It drops in 2 minutes, chat. 2 minutes, be ready. Let's see what we get. Again, hit that subscribe button, hit the notification bell. I appreciate the love. Thanks so much. Again, it should be a fun day today, guys. We will have the FOMC meeting later on today as well. We do have a manufacturing PMI also dropping at the same time in 2 minutes exactly, chat. 2 minutes exactly. Again, manufacturing PMI expected at 49.9. Yeah. Get the screen ready here. It is Wednesday. We ain't got no job and we ain't got ish to do but interpret Jolts job report data, chat. Again, 8.7 million is what's expected. 8.8 million showed up last time. ISM manufacturing PMI expected at 50 on the dot. 50 on the dot. We'll see if we show that. Again, we got about a minute exactly left. A little bit over a minute. But hit the live button next to the play button. Make sure you're fully caught up on stream here, team. Again, 49 point, or no, we showed up at 50 versus 49.5. Yeah, so again, be ready. 1 minute left. Jolts expected at 8.7. Yeah, we are ready. See what it does to the markets here. Yeah, I see 8.68, but again, we're going to round up to 8.7. That's usually what they do. Market bounced back. I should have bought it like we talked about, but that's all right. All right, so timer's a little bit early. We still got 15 seconds left until the report comes out, chat, so be ready. Here we go. All right, here we go. 5 seconds. All right, here's the report. Jolts report came out, or ISM manufacturing PMI came in lower than expected at 49.9. Lower than expected. Jolts report came in low as well. It came in at 8.5, 8.488 million to be exact, but 8.5 is what the Jolts showed up as. Lower than expected. The market has negatively reacted to this report. We're going to put the SPY up on the right side. Sometimes the first move is the wrong move, but the market has negatively reacted to this, signaling the market might be fearing recessions and depressions now over inflation. It depends on if the market ends up rebounding, but look at this negative reaction to lower Jolts job openings. So again, less economic growth signaled, and the market is reacting negatively, more so reacting conventionally in what is good and bad. So interesting here. Again, market is down on this Jolts report. 8.5 million is what it showed up as, lower than expected. PMI came in lower than expected as well, signaling less economic growth. Now, again, sometimes the first move is the wrong move. I'm not saying it is at this point, but we might be back to good and bad as bad scenario where the market fears recessions and economic weakness over inflation. Again, we'll see if anything happens here. The market's kind of bouncing back already. Hasn't been the biggest move. And again, we do have the Fed meeting today. So look, there goes the market bouncing all the way back, right back up to where it was. And again, it might be a first move is the wrong move scenario, signaling that the market's still very much fearing inflation. Or maybe the market doesn't know what to fear. That's also possible as well. We do have ISM manufacturing PMI data that we're going to put up in the chat as well. We'll put it up in the comments section so you can see it. But look at the market come all the way back up here, Chad. All the way back up. Again, Jolts came in lower than expected. Market is now reacting positively to this report. Interesting. We'll see if it holds. Again, we got the Fed meeting coming out in about, what time is it? About 10 a.m. We got about 4 hours until the Fed meeting, chat. 4 hours. We're going to stream the entire thing live as we do here, chat. Entire thing live as we do. And so, again, be ready. Later on today, guys, be ready. Again, if you want to check out Apex, today on Apex, we are up really, really nice here. Let me see what my new P&L is. We are up really, really nice on Apex. Again, market is very flat, very much doesn't know what to think, I think here. Doesn't know what to fear. Right now on Apex, we are running about, let's see if we can get this graph up here. There we go. All right, so here's my Apex graphs today, chat. We are killing it today. Beautiful graphs here. We today on Apex, which is a funded account program where they give you a demo, they test your skill. If you can pass the test on the demo, they fund you between $25K up to $300K. The base one is only $30 a month if you use my link and coupon code BT. I think it's $30 for the first month. I'm not sure if it goes up afterwards, but it's only $30 for the first month if you use my link. And if you pass the test, you get $25K in funding with a 90% split. And so it's the best of both worlds. Most day traders lose. Most day traders will lose their first couple accounts in day trading. And so it makes no sense to put the money up yourself. Instead, use a funded account program, limit your risk. Although they are a sponsor of mine, I'm biased because, again, they pay me money. I'm biased, as you would be too. If they paid you money, you would be biased as well. But again, it's a great way to learn how to day trade. If you lose, it's not the end of the world. If you pass it, you get a 90% split. You get to keep your first 25K in profit as well. Tons of great resources. Great way to learn how to day trade with limited risk. Some paper trading accounts cost the same amount. So, I mean, it's a good deal in my opinion. The base one's $30. This is me on my 50K funded account today. We made $440 gross. About 350 net, 360 net. We had a 77% accuracy rate, 77% roughly. We had, let me get this eraser out. We had, there we go. We had a total of 26 trades. We made money on 20 of those trades out of 26, only lost on 6 out of 26 of those trades. I'll take it today. You can see my profit graph. We are nicely green, and we made over $1,000 on this account yesterday. And again, it's a 50K funded account. If you want to be with me on Apex, again, here's the link. I'll put it up in chat. Use coupon code BT. Remember, chat, I'm top 3 most biased traders in the world right now. But again, if you want to check out Apex, I'll put the link up. I appreciate the love. I'll be back later on, guys. We'll be back in a couple hours for the FOMC meeting. So be ready, be there, or be square. We'll be back. Fed makes their decision on rates today. And yeah, it's a big, big day. It's the biggest day of the month is today, right now. Biggest day of the month is today. We got the FOMC meeting again in 4 hours is when the meeting is. We're going to start streaming early. Be ready, guys. I love you all. Y'all be good. I'll be back later on in a couple hours. Hit the subscribe button if you haven't already. Hit the notification bell. Remember, I have no idea what I'm talking about, and I'm wildly wrong about everything I say. Chat. Be careful. It is May. Y'all be good. And again, be ready here. Here's the SPY. Very flat on this economic report. Very flat. Hasn't really done anything. Sideways today, although I think it's green or no, it's red on the day. So again, red day. It may go away. I'm going to go eat some hay and sit by the bay. I just may. What do you say? All right, guys. I'll see you guys later. Love you all. Y'all be good.